close to 7% today. So you are seeing chip stocks and particularly crypto-linked stocks under pressure, Paul.
Yeah, interesting. Just the Bitcoin, off 4%. It's doing a little bit better than it was earlier today. I saw a story on the Bloomberg terminal here about some of the hedge funds are starting to report their 2023 returns. Ken Griffin's Citadel posted a 15.3% return in its main Wellington hedge fund last year. A person with knowledge of the matter said, beating some of its peers as money managers grappled with a challenging 2023. And Izzy Englander's Millennium Management gained about 10%. So some better results coming out of some of these hedge funds.
Well, hedge funds in particular, so Goldman Sachs actually had some really interesting data that they had pulled from the most recent 13F filings that went through the third quarter, and they were looking at hedge fund positioning, particularly when it came to those big technology names at the start of last year. So they were, as far as what the exposure was at historically low levels, but then when you fast forward and rewind, and obviously to what happened toward the end of the third quarter there, crunching those numbers. Actually, when it came to that hedge fund exposure, it was in the 99th percentile to the highest level there. So you could see how far, when it came to hedge fund positioning, was underpositioned toward those stocks at the start of last year, and then having to really up that exposure dramatically because obviously people didn't want to miss out on that big rally. And especially when you think about the NASDAQ 100 at the first half of last year, best first half to a year in a couple of decades there. So really a lot of those hedge fund managers really had to reverse course pretty dramatically there.
Yeah, if you got through June of last year and you weren't long those Magnificent Seven, you really had to hustle to try to catch up in terms of performance.
And when you look at the S&P 500 today, obviously we do know the index is lower slightly, but still just 1.7% away from that all-time high. That was actually, today is the 2-year anniversary of that. You and I were talking about that earlier this morning. So January 3rd, 2022 was the last time the S&P 500 hit a high. And since it did not hit a record last year, that was the first time since 2012 that it went a year without hitting an all-time high. But Ed Clissold over at Ned Davis Research, what I was telling you earlier, Paul, the S&P 500 going 105 trading sessions through yesterday without an all-time high. So that ranks as the 6th longest streak since 1928.
All right, very good. We appreciate that. Jess Metten giving us the breakdown on what's happening in these markets here. Continuing our conversation here on the markets, looking at fixed income space, Liz McCormick joins us. She is a chief correspondent for Global Macro Markets, joining us via Zoom. So, Liz, what do you make of this first couple of days here today relative to that tremendous performance we saw across the board, really in most asset classes there at the in that fourth quarter of last year?
Yeah, I think, like you said, was it November and December, those 2 months? Like, if you look at the global ag was up about 10%. That was the best run since like the 90s. So I think it's just normal. You're coming into the year. And also, Paul, we've priced in a lot for the Fed, right? About 150 basis points of easing already. So there's kind of a lot of good news in the system. And we have the minutes, we have jobs data this week. So I think people are being a little bit tactical now. You see some longs being squared, some shorts putting back on in treasuries. So I think people are saying, okay, I had a good run, take some profits, and let's kind of like see where the range settles in here.
So, I guess, if you look at the WIRP function, WIRP Go, the World Interest Rate Forecast function on the Bloomberg terminal, the markets are kind of, 6 kind of rate cuts this year, which seems a little aggressive to me, but I'm not in that game. What do you think the market's thinking about these days when you talk to your sources?
Yeah, and that's double what the Fed dot said, which was 3 cuts, right? Yep. So I think the market feels like, hey, if inflation keeps going down, 6 is not so out of bounds for the whole year. And some people even say, like, if we have a real recession, because now we're kind of seemingly leaning into this soft landing scenario, and especially if it's a hard recession, Fed could cut 300 basis points. So I think people are talking themselves into being okay, but it's weird. It's like, Fed is important. I always love the Fed, but I think the data, which they're watching, the data overrules everything, right? So people need to now get the data to confirm. So say the labor market on Friday, the employment rate and things kind of work in line if things are slowing. We saw some easing in the JOLTS data today in the heat in the labor market. So that's moving the way the Fed wants. So I think if the data keeps coming in line with, hey, economy's easing, inflation's coming down, then the market at least is not going to give these cuts back. Whether it starts in March, which is not fully priced, but getting there. I know Bloomberg Economics says the first cut comes in March. So I just think we have to see how the data rolls out. People are, kind of ringing the cash register a little as we start the year, being a little cautious. And like I said, I've seen a lot of bond bulls just being what they call tactical, saying, hey, we had a good run, let's take some profits, and we'll reposition when we feel stronger.
Now, in terms of the data, we had the ISM manufacturing today came in a little bit better than expected, but still, below 50. So the manufacturing recession continues. But I guess if you're the Fed, you're saying, yeah, but we're really a consumer-driven economy, and the consumer's still in good shape. Is that kind of the takeaway?
Yeah, and I was looking back at what Powell said in the presser last time. He did say he expected that the fourth quarter, consumers overall, everything would probably show a sharp slowdown from that really strong third quarter. Of course, we don't have all that fourth quarter data yet. But I think they feel like some Fed officials have tried to push back on this really strong dovish tilt. They've kind of not been so successful in that, but I think they are trying to be cautious and say, yeah, the consumer is still strong. That's why I think, who was it today? Is it Barkin today saying soft landing isn't for sure, but the odds of it happening are increasing, right? I'm sure they would love to pull that off, having tamed this terrible inflation and to pull off of this kind of ephemeral soft landing. So I think they're trying not to crush the consumer, and so that's why they kind of. What seems clear is they said rates have peaked, right? So when they start cutting is an open question, but I think the Fed doesn't want to crush things here.
I guess in 2023, one of the stories was going in that, a lot of the quote unquote smart money, the hedge funds or whatever, were short treasuries. And then you had people like Bill Ackman later in the year saying, oh, I've covered, and so on and so forth. Where do we think the street is in terms of the treasury market? Is there still a short position in treasuries, or was that kind of closed out towards the end of the year?
Yeah, I think we see some squaring. Some of the kind of the quant folks, the CTAs, those were the ones who really rode and, to their benefit for a long time, the rise in yields. That was a trend that started even the year before. But I think you're seeing, I remember Katie Kaminsky of Alpha Simplex was talking about even a couple of months ago that trend is not gone, but weakening. So I think you're seeing some of those kind of massive shorts get ringed out. We did have a lot of asset managers long, right? So I think we have to see in the next couple of weeks where the data lays out. I mean, we did have the 10-year yield flip above 4% briefly today. So I just think no one thinks it's going to be a straight line down. Plus, a lot of people think the yield curve is going to steepen, meaning long rates, whether they're going down, they'll go down less than short rates, or they're going up, which is a bearish steepener. So I think people are leaning a little bit against the long end and feeling like mid-sector of the curve is better.
So, I mean, it's interesting here. I mean, we're going to get Fed minutes today. Boy, I do not pay attention, but I know people like you and Michael McKee will give a cursory review, if not more. What do we typically do with Fed minutes these days? Because it seems like I hear from Fed officials almost on a daily basis anyway.
Right. And, what's interesting, and Anna Wong of Bloomberg Economics brought that out, and Craig Torres in DC always reminds me that, the Fed decides what comes out in the minutes. Like they had a lot of discussion. We're only going to hear the parts they decide. Eventually, I think it's a couple of years later, the full transcript comes out. But these minutes that come out so quickly, they decide. And Anna Wong was saying she thinks they're going to decide to put out a little bit that shows they talked about easing, but not too much, right? So, but I think the market kind of knows that. So like you said, Paul, we've had a lot of officials come out, and even the kind of the hawkish pushback ones, the market hasn't really bought in too much. I mean, we'll watch it, they'll trade, but unless there's some just like the only tone of it comes out that they try to spin it really hawkish, I mean, that'll kind of add some more upside to yields. But I think it's going to probably try to come out balanced. Like a flicker at cuts could happen if inflation keeps going down, but no kind of guarantee.
Yeah, I guess so. And I guess, we'll see what happens on Friday. We get the non-farm payrolls, and still looking, consensus is for an addition of 170,000 jobs. That's less than 199,000 last month, but still a pretty solid number. And the unemployment rate is forecasted to tick up just 0.1% of 1% to 3.8%. I mean, I guess that the Fed looks at that, they're saying, everybody's got a job who wants a job, and I guess that means the economy's percolating along there.
Yeah, it's interesting because, like we said, they're trying to get this soft landing, but they do need the unemployment rate to move up a little bit more. Like, none of us want to see anybody we know lose a job, nor us. But you do have to kind of still slow the demand side a little bit. So kind of the point one, like you said, forecast rise in the unemployment rate isn't going to kind of knock their socks off as far as the economy is imploding. I know people are saying, it's going to eventually get above 4%. I think that's the kind of thing the Fed wants to see. Although in their last quarterly forecast, they kind of showed a weaker economy forecast than some of the street is. So I don't know. I think, the labor market, I think the forecast job gains is like 170,000, 160.
Yep.
That's so slowing, but still people getting jobs. So I think there's more kind of work to be done on slowing the demand side. Again, it's a tight walk of just enough to kind of keep inflation going down towards their 2% level, and not, killing the economy. I don't know if they're going to pull it off. I hope so, but
right.
We'll see.
All right, Liz, thanks so much for joining us. Liz McCormick, Chief Correspondent, Global Macro Markets for Bloomberg News, joining us via Zoom. And again, non-farm payrolls expected out Friday, 8:30 a.m. Wall Street time. We'll have full coverage there. The change in non-farm payrolls, 170,000. Last month it was 199,000. And the average hourly earnings on a year-over-year basis, wages, up 3.9%. That's versus 4% last month there. So that'll be interesting. And the unemployment rate, again, just looking at 3.8%. So well below. It seems like full employment as we've been for a long time. So when you take a look at this economy over the last several years, despite all the stresses of the pandemic, the shutdown, the reopening, the U.S. labor market has shown tremendous resilience and continues to be pretty robust. And that'll certainly factor into the Federal Reserve as they think about their next move on rates. Just taking a quick snapshot of these markets. I want to go to Bitcoin, call that out. That's kind of been the story of the day. Off 4% right now, off of the lows we saw. It was down about 6%, but 43,270 as that market tries to figure out what the impact of the spot ETF will be. Let's get some company news right now with Lisa Mateo.
You got it, Paul. The maker of TV streaming boxes and software is launching its first high-end TV. Yes, Bloomberg's Jeff Bellinger has that story.
Lisa, Roku plans to roll out 55-inch, 65-inch, and 75-inch Pro Series TVs this spring. They will cost as much as $1,500. The move will put the company in direct competition with Samsung Electronics and LG Electronics. Both offer several models in that price range. The new TVs include a thinner design with a flat back for mounting on walls, improved picture quality, and better audio.
Roku is down more than 2.5%. An electronics giant is getting ready to unveil its latest product. Bloomberg's Scott Carr has more.
Samsung will be launching its next flagship device during a live-streamed event January 17th. Bloomberg reports it's likely to be known as the Galaxy S24 and that the company will lean heavily into AI. According to Counterpoint Research, more than 1 billion smartphones with built-in generative AI are expected to be on the market by the end of 2027.
Samsung is down about 3%. And a warning for Facebook users, there's been a video ad circulating that claims the government will give away $6,400 in health credits to people who are under the age of 65 making less than $50,000 a year. Now, that video tells you to click on a link to apply for the program, but the problem is the link brings you to a third-party site that's not associated with any government agency. Questions at that site, well, it could be intended to collect personal information, financial information. Experts say don't fall for it. It is a scam. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
We're coming up to 11:22 on Wall Street. I'm Nathan Hager, and we check the markets all day long on Bloomberg. The selling continues across stocks and bonds. The S&P 500 is down 0.6% or 29 points. The Dow is down 0.6%, 243-point drop, and the Nasdaq Composite is down 0.8% or 115 points. 10-year Treasuries down 8/32. The yield on the benchmark 3.95%. The 2-year is at 4.34%. 8 of the 11 main industry groups in the S&P are in the red. The biggest decliner, real estate, energy, communication services, and utilities are the only sectors in the green. And matter of fact, NYMEX crude is surging, keeping on the energy theme there, up 3.3%. $72.67 for a barrel of West Texas Intermediate. COMEX gold is down 1.4% at $2,043.60 per ounce. The euro is at 1.0917 against the dollar. The Wall Street Journal is reporting Cigna is in advanced talks to sell its Medicare Advantage business to Healthcare Service Corporation for $3 to $4 billion. It's after Cigna's merger talks with the Medicare-focused insurer Humana got a cool reception from investors. Right now, Cigna shares are lower by 1.6%. That's a Bloomberg Business Flash, Paul.
All right, Nathan Hager, thank you so much. We appreciate it. I tell you what, one job I would not want is to be the head of a college or university these days, or any leadership position in an academic institution. It is, I've seen it firsthand serving on the board of Duke's Business School. It is a tough job, and that's even before what's happened over the last several weeks at Harvard and Penn and some other places of higher education. So let's get the latest there. Janet Lauren joins us, higher education finance reporter for Bloomberg News. She's been on top of this with some of the top reporting out there. So, Janet, you know, we had the president of Penn step down. Now Claudine Gay of Harvard has stepped down. The pressure is just brutal here. The issues are visceral for a lot of people. How is this going to play out, do you think?
Well, don't forget, a couple of months ago, we had the president of Stanford step down.
Oh, that's right. Yep.
So I guess the next focus is on the board, the Harvard Corporation. It had been 12 members. Now, with Claudine Gay's resignation, it's 11 members. There have been calls for them to step down, that they ran a very flawed search, and why didn't they figure out what was going on with her scholarship? Supposedly it had been out there for a while. And the question is, will they continue to serve? Penny Pritzker, the former Commerce Secretary, is the chair of that board. And who's going to want the job as president? I mean, of course, it's the most prestigious in the world academically. But as we were just talking about, it comes with so many challenges, so many constituencies. And in my story today, one of very esteemed Professor Avi Loeb talked about, you know, two extremely important things are raising money, which we saw, constrained, and dealing with Washington. You can't forget that the federal government is one of Harvard and many universities' largest donors. 11% of Harvard's revenue last year came from the federal government. Yes.
Oh, I didn't know that.
And that doesn't even include federal student loans. Harvard is extremely generous with its undergraduates for financial aid, but its graduate students, they borrowed $100 million from the government last year. You know, look at the price tag of Harvard Law School, Harvard Business School, and, you know, Harvard has to keep its pristine reputation. If those students want jobs that are going to pay to service that debt, it had never been a consideration. No one would ever think of that before.
So is the underlying issue, I don't even know how to approach this, is the underlying issue for some observers of higher education just the, I guess, the liberal bent of higher education and administrations and leadership in higher education, which has always been, I guess, an issue, but is it just coming to the fore now because of what we've seen at Penn and Harvard and other places?
Well, I think in the last couple of years, the objective of DEI has been to be more inclusive, of course. And critics are saying it's just gone way too far. Looking at ideology, is that how decisions are made? Are you truly picking the best candidates? And this really came to the forefront, especially after the Hamas war on Israel. And you know, Bill Ackman had an extremely thoughtful post today looking at that. But the question is, where do you go from here, especially with these searches, as we were just talking about? The universities who are looking for new presidents, Harvard, Stanford, Penn, Yale, their
Wow.
longtime
Yeah.
president has resigned. But don't forget Berkeley also, and UCLA. UCLA's chancellor has been there for quite a long time. So it's a refresh. And a lot of these presidents are new in their job or had been, Harvard and Penn, because a whole host of presidents retired after COVID. You know, they just had this extremely difficult time, and you know, they had new leaders in, and unfortunately at not such a great time.
Bill Ackman today, Bloomberg's reporting. Bill Ackman says Harvard board should go for protecting Claudine Gay. I mean, that seems, I don't know if it seems extreme, but it's certainly a bold call for Mr. Ackman, which he was very outspoken about that Claudine Gay should step down.
Well, we saw right after Penn's president, Liz McGill, stepped down, the board chair, Scott Bach, within a few hours, had stepped down himself.
All right, so I guess we could see something there. So, I mean, and one of the things that, that was surprising to me is Harvard announced that their, applications were down.
Yes, they
17%.
were down by 17%.
That says something.
Yes, and it's not the anti-Semitism, all these videos that you'd seen. We don't know the full reason. They didn't really tell us anything. It could have been for a lot of reasons. Remember, this was the first application cycle since the Supreme Court decision that eliminated race as a factor in applications. They had, more essays, but it's hard to tell. But that for Harvard, which is always encouraging people to apply. We wrote about this many years ago. They're always mailing letters to encourage kids to apply. It was quite shocking for them because everybody else seemed to be up.
I tell you, what a time to be a higher education reporter, because it really feels like this is a seminal moment in higher education in this country. Is that the feeling from your sources, or is this something that's just a news cycle that will kind of blow over?
No, I don't think anybody would have ever expected this. You talk about Harvard's president, the shortest tenure in its 400-plus year history, and you've got to think that there's been a lot of tumultuous situations at that place for so many years. But yeah, it is. We're not even talking about student loans too. Yeah. We have one issue there. We've talked about before. Graduate school loans are about to overtake the annual distributions more than undergraduate loans, and people are having trouble paying those off. So there's just a tremendous amount of distrust of higher education these days, and it's expensive.
Yeah, and it really is. And you think about the stories that come out from higher education. It's either a story about the high cost and just it's too expensive, the affordability or lack of affordability of higher education, or it's a story about how big their endowments are, or huge gifts being made to these schools. It's really an odd economic model that just doesn't, if you just were to look at it, it doesn't make sense.
It doesn't. And we saw the movie Boys in the Boat the other day, and you look at the University of Washington and during the Depression and what higher education did for people. And it didn't cost a huge amount, and it hadn't cost a huge amount until much recently. Your state schools should be affordable for people to go to better themselves, and there's some really tough questions that need to be asked, and the price keeps continuing to rise. And of course, if you're at Harvard, Yale, Princeton, and your family is below a certain income, it's going to be free for you. But there's the middle that we'll have to pay for it or take out loans.
I mean, what is the thinking? Is there a consensus thinking as to what the problem is about the affordability or lack thereof of higher education? Because it's just the price of it has well exceeded inflation for so long that it just, to a financial person looking at it, says this economic model is wrong, or it's not efficient.
My goodness, they've been saying this for 25 years, and it just keeps going up. And you have people who will pay it, they'll borrow for it. But I don't know, at some point, we've seen a few small colleges that are closing. The pandemic money is gone. There's a lot of constraints, and, we'll see. The government, student loans are an entitlement.
So, so as it relates, going back to, Harvard and Penn and all these other jobs, is there a thought as to who might go for these jobs? It seems to me, I can't imagine if you're not somebody, if you're someone outside of academia, you would not aspire to this and go through that kind of rigor. I would guess it would be the dean of your arts and sciences school would just kind of slide up into the next level because presumably they've been vetted to some degree.
Well, that's what we would have thought at Harvard. Well, if you look at Rick Levin was the president of Yale for 20 years, and he so many of his provosts went on to lead great universities, MIT, just a whole bunch. And he was sort of like the great trainer for university presidents. I don't know how much that is existing today. The provost at Harvard is stepping in, but I don't think we've seen a provost take that job in quite a long time. But they're still quite prestigious jobs. But Harvard has almost a $6 billion budget. That's like a company.
Sure.
And it's very complicated, very varied sources of revenue. So we'll see. But people are going to be clamoring for all of these jobs.
Yeah, but I guess it would just be a question as when we'll follow your reporting going forward about what this means for higher education in general. Will this cause itself to kind of really look at itself again and think about its ideologies, its economic model, and all those things?
Well, but keep in mind that very few people go to schools like Harvard, Yale, Princeton. The vast majority of people in this country go to large state public schools. Yep.
Two of my offspring did that as well. So, and that's a good value, good opportunity too, but they have their challenges as well. Janet Lauren, thank you so much for joining us. Janet Lauren and her daughter joining us today, higher education finance reporter for Bloomberg News. We got you covered. Right now, let's head down to, I'm going to guess, Washington, D.C. We'll go to Amy Mars for World and National News.
That's a good guess. Thanks, Paul. Hamas says a senior leader of their group was killed by Israel in an explosion in Beirut. The Palestinian militant group says Israel killed the deputy head of the group's Politburo, known as the mastermind behind its armed wing in the West Bank. More on this now with Bloomberg's Bruce Einhorn.
This would be the first Israeli attack in Beirut in almost 2 decades. Al-Aruri, Israel said, was a mastermind of attacks in the West Bank. In Israel, also served as the liaison between Hamas and Iran and Hezbollah.
And this is also raising fresh concerns of a regional escalation of the war in Gaza. Explosions at an event honoring a prominent Iranian general slain in a U.S. airstrike in 2020, killing now at least 103 and more than 140 have been wounded. A senior official calls the blasts a terrorist attack without elaborating on who could be behind them. Claudine Gay is stepping down as Harvard's president weeks after widely panned congressional testimony about our university's handling of anti-Semitism. Bloomberg Government's Jonathan Tamari tells us Gay's standing took more of a hit after new questions surfaced about her academic work, questions that a congressional committee now says it will look into.
I think they'll certainly keep looking into what her academic citations were, if she had plagiarized. But I do think that her resignation is probably a pretty landmark moment that is going to be something where I think Republicans have claimed victory, will claim victory, will say that they've kind of achieved one of their goals.
Bloomberg Government Congress reporter Jonathan Tamari reporting there from Washington. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. I'm Nathan Hager, watching the sell-off continue in stocks and bonds after mixed data this morning on factory activity in this country and the labor market. That says investors await potential clues on the path for interest rates when the minutes from the Fed's December meeting come out at 2 p.m. Wall Street time. Even with this round of selling to kick off the new year, Phil Camparelli with JP Morgan Asset Management says the best place to put your money to work right now, he thinks, is still in equities.
We have a Fed who did their last hike in July, and we have an economy that we think only has a 20% probability of going into recession in 2024. You put those two things together, we have a 7% overweight to equities right now. And that's the biggest overweight that we've had in equities since before this crazy tightening cycle began in March of 2022.
And you can hear more from JP Morgan's Phil Camparelli on the Bloomberg Surveillance podcast. Right now, stocks are moving lower. We check the markets all day long here on Bloomberg. Right now, the S&P 500 is down 33 points, or 0.7%. The Dow's down 0.7% as well. That's a drop of 269 points. And the NASDAQ Composite's down about 1% now, down 139 points. 10-year Treasury's down 6/32. So pairing some earlier declines, the 10-year at 3.95%. The 2-year is at 4.34%. NYMEX crude is up 3.1% now, trading at $72.55 per barrel. COMEX gold is down about 1.5% at $2,041.30 per ounce. The euro 1.0914 against the dollar. British pound 1.2641. The yen 143.43. Bitcoin's plummeting, down 4.6% now, trading right around 43,000. And that's a Bloomberg Business Flash, Paul.
Nathan Hager, thank you so much. We appreciate it. Paul Sweeney live here in the Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so head over to youtube.com and search Bloomberg Radio. You know, over the last 25, 30 years of my career on Wall Street, one of the explosive areas has just been the growth of hedge funds, alternative investments. And the way to play that on the sell side is through the prime brokerage business. It's a good business. It's a profitable business, but it is a risky business. And we've seen some firms kind of pull back a little bit, based upon their risk profile. But if you're in it and you're good, it's a good profit business. Our next guest is certainly in that camp. Mark Alderati, he's a global head of prime services at Jefferies, one of those firms that's really committed to that business. Mark, thanks for joining us here in studio. Talk to us about the prime brokerage business. How's it been over the last 2 to 3 years on the street?
Sure. Thanks, Paul. Thanks for having me. So the prime brokerage business has really been one that's been expanding. There's a lot of growth. It's kind of a necessary part of the hedge fund or alternative business in terms of offering up leverage, helping folks cover shorts, and then all these sort of operational infrastructure that goes with it. You could argue that the operational infrastructure is kind of table stakes and been normalized, but as you've seen how firms have come out of this business, others have been scaling back a little bit, but some are going into it a little bit more forcefully. It is a capital-intensive business. As you mentioned, there is a risk to it. It's effectively a lending risk.
Yep.
So it's been good and it's been growing.
Now, back in my day, as it were, I mean, if I had 2 or 3 good years trading bonds or stocks or currencies, I could literally walk out the door, knock on your door or some other prime broker and say, hey, raise me $500 million or $1 billion or $2 billion, and I'd go hang my shingle out and take all the trading profits. Does that even happen anymore?
So I think that would be an exception to the rule. If you come from a very well pedigreed manager and you spin out and you get backing from that manager, it's a much more plausible outcome. But I think one of the differences today is that we see these multi-manager platforms that really have come into their own in the last few years. So if you were going to spin out rather than go out on your own, you may want to join one of these platforms instead.
So that kind of goes to the consolidation of this industry. It seems like the mom and pop, the standalone hedge fund person with 2 or 3 billion, those are kind of a dinosaur. It seems like it's all Citadel, Millennium. You got to go into these big platforms, and that's not as fun, though, is it?
Well, I can't speak to the how much fun it is or not, but I will say that it's an easier entry if you want to not manage your own business, but get closer to managing your own business. In other words, it takes care of all the infrastructure needs, it takes care of the capital raise, and you can focus on probably what you do best, which is manage people's money.
You know, when I left the sell side late 2004, I looked long and hard because that's what sell side analysts, you leave, you go to a hedge fund, long short equity. Based upon my analysis, and I said, this game's played out, long short equity. There's no alpha left. Plus it's a young person's game. I don't know, but money's still flocking into hedge funds, isn't it? Talk to us about kind of funds flows over the last several years.
Yeah, I mean, they've had ups and downs. 23 wasn't the best year ever, but it was a good year. What we've seen from our seat and our client base, half of that money went to funds that are a little bit more established, meaning have been around 5 years plus. About 25% of the money went to folks between 3 and 5 years, and then the other 25% went to the what we call emerging manager space. But I think there's a lot more specialists today. So you're like a healthcare specialist, you're a TMT specialist. And when the allocators are looking where to put their money, they're making those decisions as to what market or what segment of the market would make most sense for them.
So what are some of the, where is some of the money going these days?
Well, without getting into specific names, but
strategies.
Well, so a lot's going, and most of it, as you mentioned, is going into these multi-manager platforms.
Okay.
Away from that, again, our perspective may be a little bit different because we do have, you know, Jefferies obviously has a large healthcare banking business, trading business, so we do have a fair amount of healthcare funds on the platform, and they've done pretty well in terms of the capital raise this past year.
So, I mean, what are the big funds doing? Like, what's Stevie Cohen doing? What are the, you know, I don't know, the acrobats? Are they raising money these days?
I think, well, everybody's trying to raise money.
Everybody's trying to raise money.
And they're successful at it with, you know, varying degrees. And I think for some of the larger folks that you've mentioned, it's more about product expansion. I'm not talking about the fund structure per se, but it's what markets are they trading in, whether in the US, Europe, Asia, emerging markets. You see a very sort of wide spectrum or diversification across a lot of those, and they sort of push and pull on the levers as market opportunities arise.
So what are I know some of the challenges, having spoken to some folks in the industry, the whole regulation reporting aspect for this business, it just seems to get more and more complex every time. How do you guys, or at a prime brokerage, how do you try to deal with that?
Yeah, to be honest, we try to alleviate or move some of that burden from our clients and put it on ourselves in terms of what we report, how we report. That's not going to be possible with everything going forward. So I'll just give two examples. One is the look to have potentially more transparency within the swap or synthetic or Delta One businesses. And some folks obviously don't love that idea because they may be, you know, doing it for trading anonymity. And then two, sort of this Basel endgame, which terms may require folks to just post more capital, meaning the broker-dealers to post more capital. So the rules and the regulations are going to change the playing field sort of going forward.
Where does hedge fund money come from generally into the space?
Yeah, I mean, it's coming from family offices, it's coming from fund to funds, it's coming from pensions and endowments. And, you know, I think we've seen recently where we've been focused a little bit more has been on the family office space. Sometimes they are willing to take a little bit more risk in terms of going with an unknown individual or somebody they feel they may be more alpha getting in with somebody as they start up as opposed to going with one of the more household names. But it's sometimes safer to go with the household name because everybody's in there.
So when you submitted your budget to your bosses this year for 2024, what are some of the growth drivers that you kind of laid out for them?
I mean, for us, we are looking to do more in the synthetic and swap space. We are looking to offer a little bit more across. We're pretty solid in the straight sort of equity space, but looking to do a little bit more within convertible bonds, a little bit more within the fixed income space. So I think for us, we're looking to broaden our product offering. And we've had good traction so far.
So, I mean, what's the competitive landscape here of this prime business these days?
Yeah, listen, there are 5 very large prime brokers.
So it's Goldman, Morgan Stanley, B of A, maybe, I don't know.
No, you're right. I just don't want to say competitor's name, but sure, you're
so
absolutely
the bulge bracket guys are all in there for the most part.
Yes, but what could potentially change is if the capital requirements change, they may be more impacted than somebody like ourselves. And so I could see the landscape changing slightly over the next couple of years, and maybe the product mix and use of balance sheet and use of capital kind of changing along with it.
Yeah, because that's, I mean, you guys have to deal with those regulatory risks as much as any other industry. Mark Alderati, thanks so much for joining us. Mark is a global head of prime services for Jefferies, talking about the hedge fund business. They still get 2 and 20?
Not everybody.
Not everybody. Okay, very good. Because I'm just like 2 and 20 for what am I getting? I mean, you know, I saw some of the hedge fund results for 2023 get reported today. Kind of low double digit, big deal. This is Bloomberg. Let's get some company news with Elisa Mateo.
Hey there, Paul. Disney's board battle is intensifying. The company says it's won the support of Value Act Capital Management for its board nominees, and hedge fund Blackwell's Capital is said to be nominating 3 directors at Disney. Bloomberg's Abigail Doolittle has more.
Value Act and Blackwell's essentially saying that they are going to enter the fray on the side of Disney and Bob Iger well ahead of the company's annual meeting that typically occurs in March or April. Now, to set the stage again, Nelson Peltz's hedge fund, Trian Partners, they plan to nominate 2 candidates to Disney's board this year. They have a roughly $3 billion stake.
Disney is up about 0.2%. Ancestry was a public company about 10 years ago before being taken private by Blackstone. But could that change? Ancestry's CEO Deborah Liu sat down with Bloomberg's David Rubenstein for an episode of Peer-to-Peer Conversations.
Presumably, Blackstone, since I know that business reasonably well, they'll probably try to sell it at some point or take it public, but not in the immediate future.
Yeah, I mean, I think, look, they're our owners, and I think, our partnership with them is very, very close.
Well, to hear that full conversation, tune into the David Rubenstein podcast. And Elon Musk's SpaceX, it's launched its first cell service satellites with T-Mobile. The Starlink satellites, they work with users' existing phones rather than using specialized equipment, and they help bring more connectivity to remote areas. They'll enable text messaging first, and then later they'll offer voice and data. SpaceX will work with other carriers for the rest of the world. Those are the company stories we're following this hour. Stay tuned. We have more Bloomberg Markets coming up in just a bit. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
A little bit of a sell-off today. The S&P 500 is off about 0.6%. Same for the Dow. The Nasdaq's off about 0.9%. Small cappers, Russell 2000 off about 1.5%. Yields a little bit higher here. 10-year Treasury up about a couple basis points, 3.95%. WTI crude oil up 2.7%, $72.30 a barrel. Bitcoin off about 4.5% here, 43,100 for the cryptocurrency. Right now, let's head down to Washington, D.C. Amy Morris has got world and national news for us.
All right, thank you, Paul. More than 100 are dead. Scores are injured in two attacks that struck the Iranian city of Kerman. Mourners had gathered there to commemorate the anniversary of the death of Major General Qasem Soleimani. Norman Rule with the Center for Strategic and International Studies tells Bloomberg today could also be a day the U.S. may find itself at risk.
Today, the January 3rd, is the fourth anniversary of the killing of Qasem Soleimani. And that's a day when one would expect Iranian proxies to attack U.S. or Israeli forces just for that symbolic anniversary.
Norman Rule spoke with Bloomberg Surveillance. Iranian authorities are calling today's explosions a terrorist attack. New York City and Chicago are restricting migrant bus arrivals. Now the crackdown is spreading to the suburbs. Hinesdale Village President Tom Cawley, just outside of Chicago, spoke at a board meeting.
We've recently been advised by a bus driver that unless we do something, these buses will keep coming, unannounced, at least through March.
Four Chicago suburbs, including Hinesdale, are taking official action, passing ordinances to fine bus companies that drop off migrants without notice. Former President Trump's legal team is appealing a decision from Maine's Secretary of State banning Trump from appearing on the primary ballot. Shenna Bellows says that Trump's actions on January 6th simply makes him ineligible to run for office.
The qualifications for president under the United States Constitution are not a menu. They're not optional. My job is to follow the Constitution and the law.
Trump's legal team claims Bellows overstepped her authority. Former UN Ambassador Nikki Haley's campaign says she raised $24 million in the final 3 months of 2023, riding a wave of momentum in her bid for the Republican presidential nomination. It's more than double what she raised in the third quarter. Haley and Florida Governor Ron DeSantis are jostling for second place behind former President Trump as voting gets underway on January 15th with the first in the nation Iowa Republican caucuses. A winter storm is slated to bring snow, rain, and wind to the east this weekend. Forecasters are not yet sure how much snow the system can be expected to bring, especially around the I-95 corridor. But if it does materialize, it would be the first snow in 2 years for D.C., Baltimore, Philadelphia, and New York. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul.
All right, Amy Morris, thank you so much. We appreciate it. Private equity firms will face additional pressure to sell assets and return capital to investors after 2 years of sluggish deal-making. That's according to a senior executive at Evercore. The global value of mergers and acquisitions and related transactions fell below $3 trillion last year for the first time since 2013. That's according to data compiled by Bloomberg. Private equity funds were less active as a sharp rise in interest rates made financing deals more expensive and raised the odds of a recession. The deal slump has been exacerbated by a persistent gap in expectations. Sellers want higher prices than buyers are willing to pay. Andrew McNiven, Evercore's head of Canada, said in an interview, many private equity owners have chosen to hold assets for longer rather than exit at what they perceive as depressed values. But a number of factors are opening the path for more deals, McNiven said. There are a lot of privately owned assets and private equity assets where the owners would like to sell, he said. Companies in many industries are well positioned to buy, and credit markets have suddenly improved with bond yields falling during the late 2023 bond rally. And limited partners, the pension funds, and other investors that are private equity firms' customers, they may be eager to see more cash coming back. There were only 2 private equity-led deals with values of more than $10 billion involving Canadian firms last year, data compiled by Bloomberg showed. The largest was Brookfield Infrastructure Corp's acquisition of Triton International, an owner and lessor of International Containers. So deal flow, hopefully, maybe starting to pick up a little bit. We'll keep an eye on that as our deals team at Bloomberg News follows that going forward. S&P 500 off 0.6% as we begin afternoon trading. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Bobby Ghosh. He is Bloomberg Opinion. He's an editor there. He's going to join us with the latest on the Israel-Hamas war, get the latest reporting there. And then we're going to talk Disney, and we're going to talk media. And when you want to do that, you talk to Geetha Ranganathan. She's a senior media analyst for Bloomberg Intelligence. She's got her finger on the pulse of what's happening there. I want to know what's happening with Disney and Bob Iger and all these activist investors. A lot of news out on that. And then we're going to talk real estate. Why not? Mortgage rates are coming down. Lisa Sturdivant, chief economist at Bright MLS, see if we're going to get some pickup in some of this activity on the housing market with rates coming down. Let's kick off this hour like we like to do with Mr. Charlie Pellet.
Hi, thank you very much. Paul Sweeney mentioned shares of the Walt Disney Company. That stock higher on a down day for the rest of the market. Disney right now up by 0.1%, but the Dow, the S&P, NASDAQ, day two of the brand new trading year, all very much in the red. Right now we've got the S&P down 33, drop there of 0.7%. The Dow lower by 243 points, drop there of 0.6%. NASDAQ Composite Index down 144, drop there of 1%. The NASDAQ 100 Index also down now by 1%. 10-year yield 3.95%. The 2-year 4.35%. Spot gold down 1.3%. 2,031 the ounce. West Texas Intermediate crude up 3% right now with a 72 handle, 72.51 on WTI. And Bitcoin now lower by 4.6%. Back with a 43,000 handle, just above it at 43,015. Morgan Stanley chairman James Gorman says new banking rules proposed last year by regulators are, quote, extremely aggressive and are likely to be materially wound back before being put in place. And in a Bloomberg exclusive interview this morning, we sat down with Gorman and he told our Shonali Basak his priority for 2024 is working with the new CEO, Ted Pick.
You know, it's to support Ted, and he's a terrific guy, will be a great CEO, and my job really is to help him as best as I can, but stay out of the road. So that's really my priority.
And you can hear more of the conversation on the Talks podcast. You can download it wherever you get your podcasts. Morgan Stanley shares down now by 2%. Again, recapping, stocks lower. S&P down 31, drop right now of 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Push that blue button there. Charlie Pellet, thank you so much. We appreciate it. Paul Sweeney, we're live here in this Bloomberg Interactive Broker studio. We're also streaming live on YouTube. So head over to youtube.com and search Bloomberg Radio. As Charlie was reporting, we've got some selling out there in the street. One of the stocks that's down is one of my faves, MTN, short for Mountain Vail Resorts. I was out at Vail last year, had a great week of skiing, partly because they had great snow. Not so much. Carmen Reineke joins us here covering the markets. What's going on with our friends over at Vail?
Well, and this is why this stock is on my radar, because I'm trying to go skiing next month, and so I'd like there to be snow. Yeah, exactly. So Vail Resorts is down about 2.5%. This is ticker MTN. Its lowest intraday level since December. An analyst at Barclays is cautioning that underwhelming ski conditions by warmer than average temperatures threaten to reduce the company's full-year earnings. Basically, not a lot of snow coming this year. That could be a headwind for Vail Resorts and other ski lodges as we go through the season.
Where do you like to ski?
Well, I actually haven't been skiing that many times. Okay. This year I'm going to Whistler.
Nice.
Yeah,
oh, that's good. That's like monster size.
I know. So hoping that there will actually be snow.
I'm going out to Utah in March. I haven't put that in for the vacay yet, but so if you're listening, Colin, it's coming. Hopefully there'll be some snow, but I mean, you're out west. How bad could it be?
It's interesting because this weekend in New York, apparently we're supposed to get some snow, maybe the first of the season. So
bring it.
Yes.
Bring it. We haven't had it in a while. What else are you looking at?
Yeah, other things that we're looking at today. So cryptocurrency-linked stocks are still down. Obviously, Bitcoin has pared some of its losses. It's down about 4%. 0.8% right now. But that really affects all of these miners and other platforms that really trade in a block linked to the asset class. So looking at Coinbase, COIN, it's down about less than 2.5%. That's paired from a loss of nearly 8% earlier in the day. TeraWulf is the other one I was looking at. WULF, it's down 3.7% right now. We're seeing volatility here, somewhat from the beginning of the year, and also as investors are just waiting to see what happens around the possibility of the spot ETF being approved soon. So we talked about earlier, it's hoped that it will come next week, but until the ink is dry there, we just don't know what will happen. And this is obviously a pretty volatile asset class and group of stocks in general. Another group that we're looking at, a lot of the winners of 2023 are not doing so hot in the beginning of the year here. I look at tech stocks a lot. A lot of the Magnificent Seven is down the last 4 days. Another one, cruise stocks.
Whoa,
they were
wait a
huge
minute.
winners.
I love the cruise business.
Yeah, so they were huge winners in 2023. Both Royal Caribbean and Carnival had more than 100% pops over the last year. But today, they're all lower. So we're seeing Norwegian is down more than 4%, Royal Caribbean down nearly 3%, and Carnival down about 5%, a little bit more than 5%.
But we had this Bloomberg Television had the CEO on of, I can't think which of the public ones, just last week. He said bookings are ripping record levels, and he's got like half of 2024 already booked. So I think the demand's there. Maybe it's just a little bit on the stocks.
Exactly. I think that sometimes, even though the changing of the year is really like a psychological barrier, investors see those gains, like those huge runs up that, they beat the S&P 500 and they say, all right, now's maybe the time to take a little bit off the top there. But I agree with you. We hear a lot of strength. Are you a cruiser? No, I've not been on a cruise.
I've not been on a cruise. Well, I've been on just the investor ones with Disney, but I've never really done it. Charlie Pellet is the resident cruiser here. He knows what's going on, so he can tell you which way to go there. All right, Carmen Reineke, thank you so much. We appreciate that. Carmen Reineke covers the equity markets for Bloomberg News. All right, let's get a little back on the geopolitical front here. More developments coming out of the Middle East, an attack on a Hamas leader. Bobby Ghosh joins us. He's an editor for Bloomberg Opinion. Bobby, this doesn't seem like anybody's pulling back all here in the Middle East. What are some of the latest developments that you think are important?
No, it's getting worse and worse. There is an Iranian warship in the Red Sea. There is a U.S.-led 10-nation naval flotilla in the Red Sea. What there isn't in the Red Sea is a lot of commercial shipping, thanks to the Houthis in Yemen, who are firing off missiles and rockets. This is very bad news for world peace, for the global economy. 12% of the world's trade passes through the Red Sea. So there's the human tragedy that is sort of continuing in Gaza. There's these attacks in Beirut, in Hezbollah territory. There's bombings that have taken place in Iran that have killed more than 100 people this morning. No, no one's backing down. Things seem to be spiraling, I'm sorry to say, more and more out of control.
I mean, what is Israel saying? Because in terms of what they see the end game, I guess their initial statement was to destroy Hamas. Is that still the policy? Is that still the strategy? And if so, do they give anybody any timeline for achieving that?
That's still what Benjamin Netanyahu is saying, and no, he hasn't provided any kind of timeline, although if you listen to some of his cabinet ministers, some of the military commanders, they're beginning to fudge around the margins of what the goal is. They're now talking about depleting Hamas rather than ending Hamas. Okay. I don't know how much we should read into that change in language. I think there is a recognition, at least internationally, that you can't really end Hamas. It's not that kind of a military organization. Right. And in fact, if anything, the more this human tragedy unfolds, the more there will be opportunities for groups like Hamas to recruit from people who are suffering that that tragedy. Yep. So no, we've not heard of an end game from Israel, except we've heard from Benjamin Netanyahu over and over again that he's not going to back down, that he's going to keep at it.
Now, we did have, I guess, some reports of Israel removing several brigades out of Gaza. Is that meaningful?
I mean, it's moving brigades for several reasons. One is that its targets in Gaza now have become more isolated. It has destroyed a great deal of Gaza City, for instance, in the north. Its operations within Gaza don't require as many people as it did before. There's an enormous economic cost to this military operation, $230 million a day.
Wow.
And the Israeli economy is taking a big hit. It needs a little bit of respite. A lot of these are people who were called up from the reserves. The Israeli companies have lost a lot of manpower, so they too need a bit of respite. And then there's the other consideration, which is Israel needs to have a sizable fighting force ready and able and rested for the possibility of a new front opening up elsewhere in the north against Hezbollah. So I wouldn't read too much into the withdrawal of the forces. I don't think that represents a slackening of the Israeli resolve in any way.
Iran, you mentioned Iran before, and that's probably, a darn close to a worst case scenario if that were to escalate to that point. Have we heard anything from Iran as to their intentions? I mean, putting that warship in the Red Sea, which is not a big body of water, can't be a good development. What do we hear from Iran, if anything?
Well, the ship itself is an old vessel. It doesn't represent a real threat. What it is, and I'm writing a column on this plug. I'm writing a column on this very subject. It is Iran's way of showing the world that we are backing the Houthis, and it is Iran's way of showing the Houthis that you're not alone. In actual military terms, it may not represent much, but it's an important symbol. But right now, Iran is distracted even from that with these two bombings that took place at a major gathering of people for Qasem Soleimani's, at the anniversary of Qasem Soleimani's.
Now, do we know who's behind that and what the strategy?
We don't know. We know that more than 100 people have been killed. The numbers are climbing as we speak. There does not seem to have been a big name target, unlike, let's say, the bombing in Beirut. We don't know. Iran is being somewhat restrained about who to blame. They're calling it a terrorist act. Fair enough, but it's not pointing a finger. You expect that it'll point a finger at Israel. That's been Iran's style. But this is not an Israeli style operation. Israel traditionally has attacked individuals, high-value targets within Iran, nuclear scientists, people like that, who represent a threat. This was an attack on civilians, and that's not traditionally been Israel's style.
So with the Houthis, is there any credible discussion for attacking them directly to remove that threat to shipping?
Well, so far, American warships have been interdicting missiles that have been directed at commercial shipping. They've sunk a couple of boats that had attacked a ship. But now there are very few ships. Most of the big shipping lines have said we are not going to go into the Red Sea at all. It's too risky. And so then the next question is, what do you do to reopen those shipping lanes and encourage those tankers and container ships to come back into those waters? Because the way around Africa is long and expensive. So how do you get them back? You get them back by ensuring that the threat is removed. That might require something more than waiting for the missiles to be fired off before taking them out. It might require going in and taking out some of the missile installations. Nobody as yet has been willing to do that. The Houthis are a kind of interesting group. They're sort of ragtag rebels, but they're backed by Iran, and they have fairly sophisticated weapons, and they have defeated the combined armies of Saudi Arabia, Egypt, the UAE, Bahrain. They gave them a real shellacking. The Saudis were humiliated and forced to sue for peace. So these are a very serious force. I would argue that they are getting to the point where they're as dangerous as Hezbollah, if not more so.
Wow. So I mean that sounds like a bigger escalation than anybody at this point means. What is the current positioning of the U.S. government? It seems like we have our folks going over there around the Middle East trying to talk to the interested parties. Are we still pushing Israel to kind of back off a little bit or stand down a little bit?
If we're pushing, we're not doing a very good job.
Right.
They're not listening. The Biden administration continues to sort of hedge. It recognizes that Israel suffered a major terrorist attack. It recognizes that Israel has a right to defend itself. But at the same time, it recognizes that Israel seems to have far exceeded the bounds of that. The president himself has said that this has gone way too far. But beyond that, we don't seem to be interested in or able to impose any kind of actual restraint on Israel. And by the way, neither, it seems, are Israel's relatively new Arab friends, the United Arab Emirates, Bahrain. These are the countries that signed those Abraham Accords, remember, with Israel. They're not able to sort of influence Israel at all, and nor have they extracted any kind of, shall we say, punishment. They've not said we're tearing up the Abraham Accords, we're withdrawing our recognition of Israel. Nobody wants to bell that cat.
So, it's interesting here. I just don't know where this goes. Is there a role for a third party like the United Nations or somebody to kind of broker something here?
I think so. Eventually, there'll have to be a role for the United Nations and within the United Nations for the Arab members to play a very important part. But nothing can start until the shooting stops. And with Israel sort of insisting that it's not interested in doing that right now,
and
there's really no role.
Netanyahu still enjoy public support for it?
No. The vast majority of their polls, after polls after polls, showing that the vast majority of Israelis want him gone, but after the war.
Right, so there's still public support for the war per se, but not necessarily Netanyahu.
Yes, there's public support for the war. There is, this is a country that's still traumatized by the events of October 7th. There's support for the war, and there's a reluctance to change leaderships in the middle of a war, which is understandable. Countries that are at war tend not to want to change leaders unless the war is going very badly.
So he has no incentive to stop the war.
You could say that, plus with the judgment of the Supreme Court a couple of days ago, which kind of overthrew his attempt to change the legal sort of structure in Israel. He is cornered. He knows that the moment the fighting's over, he is toast.
Wow. Yeah, that's a strange set of incentives over there influencing what's going on. Bobby Ghosh, thank you so much for joining us here. Bobby Ghosh, he's a columnist and editor for Bloomberg Opinion, real expert on that part of the world. We appreciate getting his thoughts here as we continue to navigate what is going on in a very, very troubled part of the world. And it has economic impacts, as we've seen with maritime traffic through the Red Sea, essentially curtailed here. And that's impacting a lot of shippers and consumers at some point through higher prices. That is the concern, as its impact on global GDP is trying to be analyzed at this point. S&P 500 off 0.7%. The Nasdaq's off about 0.9%. And yields slightly higher. Got the 10-year Treasury at 3.94%. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Apple, it lost more than $107 billion in market value yesterday after analysts at Barclays downgraded the stock. Dan Ives, who covers Apple at Wedbush Securities, says this is going to be viewed as more of a golden buying opportunity.
The next 3 to 4 quarters, you're going to have iPhone growth. You have growth coming out of China, despite the fears and obviously a lot of the bear noise. And I think the most important thing is services. I think services is going to be teenager type of growth. That's key to the multiple expansion story. And then we go into later this year, there's just going to be more monetization from an AI, as we talked about. That's going to be the next layer.
Apple shares are down about 1%. But Apple wasn't the only company downgraded by Barclays. Shares of Wendy's, they're lower after Barclays cut the fast food chain to equal weight from overweight. Now, analyst Jeffrey Bernstein, he says increased unit growth is expected to come from the international business, which is a challenge given the brand's limited global recognition. He also has concerns around heightened competition in breakfast and ongoing competition from McDonald's and Burger King. Wendy's right now down about 1.5%, McDonald's down 0.3%. And Starbucks looking to boost its afternoon business by expanding its food lineup. Today, it's adding a chicken maple butter and egg sandwich, as well as a potato cheddar and chive bake. It's also launching a seasonal vanilla bean custard Danish. Now, the coffee chain, it's really run up against a few challenges, including complaints about high prices and cold pastries, but lately more customers have been adding food to their orders. Checking with Starbucks right now, they are down about 0.5%. Those are the company stories we're following this hour. I'm Lisa Mateo, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, and the Russell 2000 all moving lower right now. We are looking at a 0.7% drop in the Dow, down 267 points. S&P making a run for the worst level of the day right now, down 35 points, drop there of 0.74%. NASDAQ 100 index right now lower by 1%. The NASDAQ Composite Index also down now by 1%. 10-year yield 3.93% with a 2-year that's yielding 4.34%. And spot gold now down 1.3%, $2,032 the ounce, while West Texas Intermediate crude is rallying 2.9%, $72.40 a barrel. Bitcoin today now down 5.3%, Bitcoin at $42,736. Starbucks is expanding its food lineup in its latest attempt to bring its coffee-loving customers in the door outside of the peak morning hours. Effective today, the chain is adding a chicken, maple butter, and egg sandwich to its permanent menu, as well as a potato, cheddar, and chive bake. Starbucks shares, they are lower along with the rest of the market right now. Starbucks down by about 0.6%. Again, recapping, stocks lower. S&P, second trading day of the brand new year, down now by 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yes, it is. Charlie Pellet, thank you so much. We appreciate it. Paul Sweeney live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube. So head over to youtube.com and search Bloomberg Radio, and that's where you'll find us. The discussion of the day for me, media, entertainment, fun stuff. Geetha Ranganathan joins us. She's a senior analyst covering media for Bloomberg Intelligence, joining us via Zoom from our Princeton, New Jersey campus. Geetha, let's start with Disney here. The activist investors and are kind of swirling around this company. The pressure seems to be building on CEO Bob Iger to right the ship, to get the stock moving again. What's going on at Disney?
Yeah, you're absolutely right, Paul. I mean, if you look at kind of Disney shares, they're down about 55% from their March 2021 highs. So obviously there's a lot that needs to be done here. Having said that, though, I think Bob Iger obviously recognizes what needs to be done. He has kind of taken a lot of steps, whether it's restoring the dividend, whether it's, kind of right-sizing content expenses. coming up with plans to reinvigorate streaming. They've had almost 30% streaming pricing increases. They're looking to kind of gain full ownership of Hulu. So he's really juggling a lot of different balls here. But you're absolutely right in terms of the activist investors. They're obviously swirling around Disney, but Iger this morning at least seems to be kind of shoring up his defenses with that news about this kind of strategic partnership with Value Act as well as Blackwell's. So they seem to be kind of getting some support in their fight against Nelson Peltz.
Is there anything, I mean, you look at the Walt Disney Company and the cable networks led by ESPN, the theme parks, the film studios, all the studios they own, all the brands they own. There's so many valuable assets there that I guess if you do a sum of the parts, maybe you could say that this stock is undervalued. And I'm sure Disney's done that internally. Realistically, do you think there's any big deals that Bob can do here to unlock value, whether it's sell ESPN or anything like that?
So I think the one deal, and obviously this is already ongoing, is they're looking to gain full ownership of Hulu, and that's underway right now. So we were not really sure what they're going to pay. They obviously have to pay a minimum of about $9 billion for that 33% stake of Comcast. But then whether it'll go higher to about 13, 14, 15 billion, nobody really knows. In terms of other deals, I'm not really sure they want to do anything very big. We do know that they're looking to actually divest their India operations. They're in the process of merging it with one of the biggest Indian wireless operators, which is Reliance, to create a huge media conglomerate there. So they're really looking to kind of more trim and kind of streamline their operations. So I'm not necessarily sure they're going to go out and be more acquisitive. In terms of ESPN, they have clearly said that they're not looking to get rid of the asset. They're looking more for some kind of a strategic partnership. Not really sure whether that's going to be a tech giant or whether that's going to be one of the leagues. So that's a little bit of a wait and watch. But I think the one thing that the street is really looking for clarity on is what they're going to do with their linear TV assets. We know that last year, Bob Iger had kind of floated this whole idea that, he's not married to the linear TV ecosystem. He doesn't mind getting rid of assets. But then he kind of walked that back a little bit. So again, there's a little bit of uncertainty, I guess, with what happens with the linear TV assets.
All right, so that kind of goes to the next question, which is kind of the streaming business, the pivot from broadcasting cable television channels over your cable system to a streaming model. Netflix makes a lot of money doing it, but nobody else really does. What are we going to see in 2024 with the streaming business from the big media companies?
Yeah, absolutely right. Nobody else other than Netflix right now is making money in streaming. But the new mantra in streaming is less bad is good. So as long as all of these companies have lower streaming losses, even that is being viewed as a positive sign by investors. So in the case of Disney, for instance, in 2022, they had over $4 billion that they lost in their streaming business. They really kind of pared that down pretty significantly in 2023 to about $2.5 billion. We think it could go down even further, maybe just about $750 million or $800 million in 2024. So they are looking to, all of these companies, Disney included, are looking to break even on their streaming businesses. Of course, it's going to be a very, very long road for them to kind of get to the profitability levels that Netflix has achieved. Because if you look at Netflix operating margins right now in their streaming business, it's about 22, 23%. And they're really on a path to get to that 30% margin level.
Yeah, that's kind of where the media companies used to be back in the day. So, all right, another theme for 2024, as I read your research and see some others stuff out there on the street, is maybe some M&A in this industry. As this industry maybe needs to consolidate because the profitability isn't what it used to be. And it's tough to be a standalone company if you're not really big, like a Disney, like a Netflix. How do you think that might play out?
Yeah, we've already seen a lot of rumblings, Paul, to that effect. So we've had, just at the end of last year, we had this whole news about maybe Warner Brothers, Discovery, and Paramount kind of coming together. And then that's sparking a huge discussion about whether, maybe Comcast should also be in the fray for some of these assets. I think the real problem, and I think that what the street is having a real hard time kind of grappling with is, the debt levels of some of these companies. So if you kind of look at Warner Brothers and Paramount, the reason that they probably will not like that deal deal is one is, of course, you have very, very heavy linear TV exposure. And remember, linear TV, of course, is in secular decline because you're having about 10% cord cutting, people canceling their pay TV subscriptions. But again, if you look at that Warner Brothers Discovery and Paramount combination, that's $60 billion in debt. And nobody kind of really likes that. So, I don't really know how it's all kind of going to shake out. Of course, I think M&A is going to be the top hot topic or the hottest topic for 2024, but not really sure if any deal necessarily makes sense just because of that very, very heavy linear TV exposure.
And for years, media investors and analysts have been wondering when and if a tech company, whether it's an Amazon, an Apple, somebody, a Google, somebody really big with those limitless pockets will come in and make a big investment in the media and entertainment business. We really haven't seen that too much here. Any reason to think this year will be different?
I don't think so, Paul. I think if at all, it'll be even harder this year. I mean, this is a presidential year. We're obviously going to see a lot more of, the antitrust and a lot more of, the regulatory concerns kind of resurface. And I think any of these big tech giants are going to be very, very careful not to kind of rub the regulators the wrong way. So it's very hard for us to see them kind of make at least any huge splashy acquisition.
The movie business. Are people going to the theaters anymore, Geetha? How's that business kind of behaving now post-pandemic?
Yeah, that's a great question. Actually, we've seen, obviously there was both this demand problem and the supply problem that was kind of created by the pandemic. We've actually seen the demand kind of come back pretty nicely, I would say, through 2023. Just to kind of put some numbers around it, we saw $9 billion at the domestic box office. That is still $2 billion shy of pre-pandemic levels, but it's still almost 300% above, like 2020 when kind of the movie business was completely shut down. So we've kind of seen some resilience. That said, we had another shock to the whole, I think, entertainment world in 2023 after the pandemic, which was really the writer's strike as well as the actor's strike. And that is going to have some ramifications for the box office in 2024 because we've seen multiple movies, multiple tent poles actually getting pushed out to 2025, whether, it's Mission Impossible, whether it's the new Snow White movie, Captain America, the new, Spider-Verse movie from Sony. All of these, will almost shave off about $1 to $2 billion of box office. So right now we're looking at a much weaker kind of box office outlook for 2024.
All right. Very good. Geetha Ranganathan, thank you for joining us, as always, with a breakdown of what's happening in the global media and entertainment space. Lots of big themes here for that. So Geetha Ranganathan, Senior Media Analyst, Bloomberg Intelligence, reporting from Princeton there with her research. And you can find that at BIGO for Bloomberg Intelligence, BIGO in the terminal. We'll get you all the Bloomberg Intelligence research, some of the best equity, credit, policy research for equities, bonds, commodities, everything out there. So BIGO is your format, is your function there to get all that research. We got more than 300 analysts out there covering all these 2,000 companies, 130 industries, so good stuff. Looking at the markets here, we are still trading down about 0.6% on the S&P 500. The Nasdaq's off about 0.9%, and the Russell 2000 off 1.6% here, so a little bit more weakness there in the small cap stocks. Of course, those are the stocks that really outperformed during the last 8, 9, 10 weeks of 2023, so giving back a little bit more here. And Bitcoin off a solid 5% here, 42,870 for Bitcoin. Right now, let's head down to Washington, D.C. Immerse has got World and National News for us.
Thanks, Paul. Houthi militants are claiming they have attacked another merchant ship in the Red Sea. In a televised speech, the spokesman for the Houthis' armed forces says the vessel was attacked after ignoring warnings. The Houthis say they're going after any vessels that have a connection with Israel, although those purported links have looked increasingly questionable. Israel is on high alert for an escalation with Hezbollah after one of the top leaders of Hamas was killed in a strike in Beirut. Hamas says Israel killed Salah al-Aruri, deputy head of the group's Politburo, who was known as the mastermind behind its armed wing in the West Bank. We get more with Bloomberg's Bruce Einhorn.
This is now an open question whether Hezbollah sees the need to respond, or on the other hand, whether it is deterred by the reality that Israel was able to get to Beirut itself.
Bloomberg's Bruce Einhorn reporting. A large delegation of Republican lawmakers is in Texas today to get a first-hand look at the southern border. House Speaker Mike Johnson is leading the group of about 60 in their visit to Eagle Pass. Republicans plan to make border security problems a major issue in the upcoming elections. Health officials are concerned about the rise in respiratory viruses nationwide. According to the Centers for Disease Control, more than half the country is seeing a spike in COVID, flu, and RSV. Dr. Nilesh Patel is the chairman of the emergency medicine at St. Joseph's Medical Center in Paterson, New Jersey, where COVID cases have tripled in the past month.
They are sicker, especially patients that are the most vulnerable, that have comorbid disease, things like cancer or respiratory disease.
Patel and CDC officials say if you do come down with a respiratory infection, make sure you limit your exposure to others. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg, day 2 of the new trading year. And we are looking at another down day for the Dow, the S&P, and NASDAQ ahead of the Fed's minutes. We have got stocks and bonds extending their new year route. Right now, the Dow Jones Industrial Average is lower by 200 points. That is a drop right now for the Dow of just about 0.5%. S&P lower by 26, a decline now of 0.6%, while NASDAQ is down 121 points, a drop there of 0.8%. West Texas Intermediate crude oil is trading higher. WTI up now by 3%, $72.48 a barrel. Spot gold lower by 1.1%. A 10-year that is now yielding 3.93%, with a 2-year at 4.34%. Apple shares are declining again, down another 0.8%. Anurag Rana is a senior tech analyst with Bloomberg Intelligence, and right here on Bloomberg Markets, he told us China will be a major story for Apple in coming months.
I think the biggest issue in our view, at least for the next 2 years, is what's going to happen in China, because it's really the growth engine for Apple, and if they are losing market share to Huawei's new phone, and if that continues throughout the year, then I think they will have a very muted 2025 also. And I think that's really the big story for Apple right now, is really what's happening in China. Everything else, you can pretty much throw it out of the window.
And again, we've got Apple down by about 0.9%. Just getting word that BP and Norway's Equinor have terminated their power agreement with New York State for a 1.3 gigawatt wind farm in the Atlantic, blaming changing economic circumstances that made the Empire Wind 2 project unviable. Again, recapping, stocks lower, S&P down 25, drop there of 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. Paul Sweeney live here in a Bloomberg Interactive Broker studio. We're streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Radio. I guess looking at the residential real estate market, the bad news is interest rates. 6.76% is what the 30-year fixed, according to MBA, cost you. 6.76%. That's the bad news. The good news, that's a lot better than it was back in October, 7.9%. So rates are coming down. They're coming down. What does that mean for the residential real estate market? Is that helping to ease the affordability crunch that's really kept a lot of people out of the market? Let's check in with our next guest, Lisa Sturdivant, Chief Economist at Bright MLS. So, Lisa, I'm guessing this pullback in mortgage rates we've seen is on the margins good for the market. Is it enough, though?
Yeah, I think the fact that mortgage rates have been declining so consistently for the last 6, 7, almost 8 weeks now, I think is very good for prospective home buyers who have really been facing these 2-decade high mortgage rates. I don't know that it's exactly what the market needs, though, right? I think the biggest constraint on the market continues to be a lack of homes for sale, historically low inventory. So until we see that inventory rise, which I do think we're going to see in 2024, but until we see that, I think the market's still going to be very, very constrained.
And I guess on that front, that lack of supply, which has been a concern for the market for some time now, and a lot of that is tied to the mortgage rate, because a lot of folks, most Americans, are sitting on a mortgage somewhere in the 3 to 4% range. And so, boy, I don't want to have to sell my house with that nice mortgage and then take another mortgage on my next property at north of 6% here. Is there a rate out there that you think might entice, a good chunk of sellers to come to the market?
I don't know if there's a magic rate, but there's definitely a rate for everyone. And I don't think it's as low as people think it is. I think what we're going to find is that 2024 is really going to be the year of life happens. People who have a family or a financial change are going to find themselves having to list their home for sale, having to buy a new home, having to take on that rate that might be double what they had. And nobody's going to be happy about it, Paul, but I think there are going to be more and more people who are going to find themselves in that situation this year. The good news for those home buyers, though, is they have likely very high levels of equity in their home that they're able to roll over to that purchase, which sort of takes the bite out of having to take on a higher rate.
So what do we know about the buyers out there? Are there just a bunch of frustrated buyers out there because there's just really nothing, in the existing home market at least, there's just really not much out there?
Yeah, I think we are seeing a lot of frustrated buyers. We're seeing some buyers who are, just taking a break. We're seeing a lot of buyers who are acting really opportunistically. We saw that in the data in late November, where that week after Thanksgiving is usually very slow, but rates dipped and we saw buyers in the market. And you mentioned new construction. I think we're also seeing buyers who might not have been considering a new home going onto a builder's lot to check out new construction, because in some markets, that's really where the inventory is.
And on that front, there's been a lot of reporting that builders would actually buy down your mortgage. No, you don't have to deal with a 6.5% mortgage. Just pass. We'll buy you down 100 basis points, 150 basis points. So maybe now it's more affordable. Is that still going on?
Yeah, we're still seeing some of that, not as much as we were back in the fall, but I think builders do have a little bit more flexibility than a typical homeowner who's trying to sell their home, where they can offer upgrades or other incentives to bring prospective buyers on the lot, in addition to buying down rates or offering other closing cost assistance. We are seeing that on the existing home side, though. We are seeing that there are more sellers who are offering concessions, whether it's help with closing costs or other concessions. We're even hearing some seller financing going on out there, where sellers are really trying to make the deals work for buyers.
Interesting. So what's the geographic breakdown, or what are the geographic differences here in the housing market? Are there some parts of the country where there's more existing supply than others? I would think in some of the hot markets in the Sun Belt, if you're not buying something that's just built, you're probably not, you're probably out of luck.
Yeah, I'm really glad you brought that up, because we often talk about the housing market like there's one market across the country, but there really is a lot of variation. And places like the Southeast and the Midwest, frankly, where home prices are more moderate, we're still seeing very engaged buyers, still seeing very low inventory. Conversely, some of the places where inventory is starting to expand include some second home markets, right? Some of these coastal and mountain markets that were really, really hot during the pandemic. We're starting to see inventory rise even higher than it was to pre-pandemic levels in some of these vacation home markets, where people may be listing second homes, maybe getting rid of rental properties. And so there are more opportunities for buyers in some of these markets that had been so hot during the pandemic.
So at the end of the day here, a lot of it comes down to mortgage rates. Where do you think mortgage rates will end 2024?
I think mortgage rates have room to come down. We know that the gap between the 10-year Treasury and the 30-year fixed rate is much wider than it would be traditionally. So we have room for those rates to narrow. We do know, or feel pretty confident, the Federal Reserve is going to begin to lower interest rates as we head into 2024, maybe not till the middle of the year. So, my forecast is for rates to continue to come down steadily. I do think we're going to stay in the sixes in 2024. I think rates in the sixes are the new normal. And to be fair, over the last 5 decades, the average rate on a 30-year fixed is 7 3/4. So even at 6%, we're still well below where we are historically, but we're just, anchored into the rates that we had during the pandemic, which were just so much lower.
So affordability has been the key issue here, headwind. How about for the younger buyers? How are they behaving? Are they finding opportunities?
Yeah, we're finding that the younger buyers are still very eager in the market, and frankly are finding we're finding that people are being a little bit more creative because inventory is so tight. Affordability is such a big challenge. We're seeing more first-time buyers who are interested in buying a home with a rental stream, maybe renting out a room on a short-term rental site, or buying a duplex and renting out half. We're also seeing more families who are buying homes together, adult children buying with their parents. And so there is an opportunity out there to get into home ownership, but with prices as high as they are and rates still elevated, people are having to get a little bit more creative.
Yeah, absolutely. All right, we'll see. We'll keep an eye on those mortgage rates. Again, 6.76% today on a 30-year fixed. Lisa Sturtevant, thanks so much for joining us. Lisa is the chief economist at Bright MLS, talking about the residential real estate market. I can tell you, just in the metro New York area, still very competitive. And you put a sign in the ground, and if it's reasonably priced, that home is gone in an instant around here. So we'll have to see how it plays out across the rest of the country as interest rates presumably come down, with our Federal Reserve set to presumably cut rates later this year, maybe as early as March. So we'll keep an eye on that. S&P 500 off 0.5%. This is Bloomberg. get some company news right now with Lisa Mateo.
Thanks, Paul. The maker of TV streaming boxes and software is launching its first high-end television. Bloomberg's Jeff Bellinger has that story.
Lisa, Roku plans to roll out 55-inch, 65-inch, and 75-inch Pro Series TVs this spring. They will cost as much as $1,500. The move will put the company in direct competition with Samsung Electronics and LG Electronics. Both offer several models in that price range. The new TVs include a thinner design with a flat back for mounting on walls, improved picture quality, and better audio.
Roku down more than 2%. Coinbase is leading crypto lower and speculation of a spot Bitcoin ETF approval. We get more from Bloomberg's Katie Greifeld.
The SEC has a deadline coming up next week to take action on one of the dozen or so applications in their queue right now. And the current thinking is that they'll either approve or reject all the applicants at once rather than playing kingmaker here. So as you would expect, rumor, innuendo, it's at an all-time high right now. That's translating into volatility, both in Bitcoin itself and those crypto-related stocks. But it's important to note that all of these assets, all of these names, they're coming off a banner 2023.
Coinbase is down about more than 2.5%. And despite near record sticker prices and high interest rates, Toyota and Hyundai, they both managed to report strong U.S. new vehicle sales in the fourth quarter. The Japanese automaker said deliveries rose more than 15% in the last 3 months of 2023. And that was thanks to growth from hybrid electric vehicles. Now, Hyundai sales gained about 5% in the period, marking a record. Right now we have Toyota is up about 0.1%. Hyundai right now is down about 3%. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, a quick data check here. Continued lower stock prices, S&P 500, the Dow both off about 0.5%, NASDAQ off about 0.8%, and the Russell off 1.6%. Yields just slightly higher. 10-year treasuries are 3.93% here. WTI crude oil, it is up 3%, $72.50 a barrel. Gold off about 1.3%, $2,032 an ounce. And Bitcoin, it is off 5.3% today, 42,700. So keep an eye on the crypto space, waiting on that spot ETF in the crypto space, which a lot of folks think can be a material change in that marketplace. Right now, let's head down to Washington, D.C. to get world and national news with Nancy Lyons.
Thanks, Paul. House Speaker Mike Johnson is in Texas, leading more than 60 House Republicans to the southern border. It's a bid to raise pressure on President Biden and Democrats to agree to strict new immigration laws. It's expected to be a key messaging point when lawmakers return to Capitol Hill this week, as we hear from Bloomberg's Amy Morris.
Senate negotiators spent the holiday recess working through sticking points in a prospective border policy deal that Republicans demanded in exchange for approving new aid for Ukraine. Now senators must lock in an agreement, finalize the text, and pass a bill. In the House, Republicans want to impeach Homeland Security Secretary Alejandro Mayorkas. Border Patrol logged more than 190,000 migrant encounters between ports of entry along the southwest border just in November. That's a dip from last year, but still staggeringly high. In Washington, Amy Morris, Bloomberg Radio.
The push toward the presidential election is gaining momentum with the Iowa caucuses just weeks away. Henrietta Trey's with Veda Partners tells Bloomberg we'll likely know more about the direction of the 2024 election in the next 90 days.
You have about a third of the country who's going to decide the election, from the independents, undecided Dems who are maybe holding out for another candidate, and about 8% of Republicans. And they're all going to start making choices after the first three primaries. So this next 2-3 month interval is going to be such a momentum opportunity for either candidate.
Trey says President Biden's approval rating is at a floor right now, while she believes former President Trump's is at the ceiling. And she believes Biden has the better chance of winning over undecided voters when the final two candidates emerge. Former President Trump is trying to get his name back on Maine's presidential primary ballot. His name was removed last week by Secretary of State Shenna Bellows due to his alleged involvement in violent protests at the U.S. Capitol almost 3 years ago. Trump has filed an appeal, but Bellows says she is confident her ruling will stand. President Biden is ramping up his 2024 re-election campaign. The president will be delivering a speech in Valley Forge, Pennsylvania on Saturday to mark 3 years since a pro-Trump mob stormed the Capitol. Biden is expected to cast Republican frontrunner Donald Trump as an existential threat to democracy. Then on Monday, Biden will visit Mother Emanuel African Methodist Episcopal Church in Charleston, South Carolina, where 9 people were killed in a mass shooting by a white supremacist in 2015. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Paul.
All right, Nancy, thank you so much. We appreciate that. Looking at Tesla here, the stock's off 3% today, up 122% over the last 12 months. So a heck of a ride there. But Tesla is turning to leasing for a shrinking portion of its quarterly sales, and a trend one analyst said may be linked to weak resale values. The car maker said Tuesday that just 2% of Model 3 sedan and Model Y sales and 3% of other models were subject to operating lease accounting in the fourth quarter. Both shares were the lowest since Tesla started disclosing the figures in quarterly production and delivery statements in 2019. The sharp declines suggest Tesla may be struggling to offer consumers attractive leasing rates. Jefferies analyst wrote in a report Wednesday. This is not necessarily negative for near-term profitability, but we remain concerned about the lack of residual value, he said in the report. Residual values refer to how well vehicles retain their worth over the course of ownership or a lease contract. When residual values weaken, lessors tend to charge customers more upfront or per month to offset depreciation. This makes leasing less compelling than buying. So we'll keep an eye on that. Again, Tesla stock today off about 3%, but boy, it is more than doubled over the trailing 12 months, making up for that really tough performance in 2022. Sound On with Joe Matthew or Jack Fitzpatrick. That starts right now.
from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from DC's top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Well, we'll have to look at rising tensions in the Middle East as not only do we hear early this morning, of 2 explosions killing at least 103 people in Iran, and of course the latest on the Israel-Hamas conflict. But here at home, we'll discuss the trip from Republicans to the U.S.-Mexico border, possibly a challenging situation in the congressional negotiations over the border, and Ukraine aid. Coming up, I'm going to speak to Hagar Shamali, former director for Syria and Lebanon at the National Security Council, on the latest in the Middle East. But of course, we've got to start with a market report from Charlie Pellet.
Hi, thank you very much, Jack Fitzpatrick, and we are just under an hour away from the latest FOMC minutes. Constance Hunter is senior advisor at Macro Policy Perspectives.
What we're not going to see in the minutes is we're not going to see talk about rate cuts, right? That's going to be not part of the minutes. They were part of the forecast. They're clearly, as they have said, we're focused on other things. The minutes are going to show that they were focused on other things.
And you can hear more of the conversation on the Surveillance Podcast. You can download it wherever you get your podcasts. Bonds and stocks are extending their New Year route as traders look to the minutes of the Fed's last meeting to see if rate cut wagers are too aggressive. S&P now lower by 18. Yes, we're off session lows, but still down by about 0.4%. Day 2 of the new year, and we have got the Dow lower by 133 points, a drop there of 0.4%. NASDAQ down 104, a decline of 0.7%. 10-year yield 3.92% with a 2-year 4.33%. Gold down $24 the ounce, now at $2,034. That is a drop of just about 1.2%. While West Texas Intermediate crude now up 3.1%, $72.58 a barrel on West Texas Intermediate crude. Bitcoin now down 4.9%, 42,918 on Bitcoin. The Walt Disney Company says it has won the support of Value Act Capital Management for its board nominees and will consult with the activist investor on strategy as the world's largest entertainment company responds to pressure to boost performance. Starbucks is expanding its food lineup in its latest attempt to bring its coffee-loving customers in the door outside of the peak morning hours. Effective today, the chain is adding a chicken, maple butter, and egg sandwich to its permanent menu. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you very much, Charlie. Jack Fitzpatrick here from Bloomberg Government, sitting in for Joe Matthew, who will be back next week. Plenty to discuss, especially on the Middle East. So I'm looking forward in a few minutes to speaking with Hagar Shamali, who led the efforts focused on Syria and Lebanon at the National Security Council back during the Obama administration. We'll get some big picture takeaways on that and some specific information from her. But let's bring in our panel of Bloomberg Politics contributors right now, Rick Davis and Jeannie Sheehan Zaino. I think I have one obvious question on the politics of everything that's happening in the Middle East, and there are basically 3 points to discuss here. One, the explosions in Iran that the latest I've seen in our coverage on the Bloomberg terminal is that at least 103 people in Iran killed. Also, separately from that, the death of the deputy Politburo leader of Hamas, Saleh al-Aruri, in an explosion in Lebanon. And also the rising tensions in the Red Sea, especially following a report from the Houthi rebels in Yemen saying that they had gone after another ship of French origin, part of their broad discussions broad focus on going after ships that they say have any connection to Israel. And let's go right now to Hagar Shamali, again with experience of the National Security Council and founder of Greenwich Media Strategies. Hagar, really happy to have someone with your breadth of knowledge here. And as I go through a sort of triumvirate of issues to focus on in the Middle East, my big picture question for you is, to what extent do we look at this as a string of individual incidents, or to what extent do we see this as a collective rising of tensions that can itself further tensions, further violence in the Middle East? Do you see these as in any way collectively rising tension in the region?
Sure. Well, so one of the things that I always say is that when the storms gather in the Middle East, it rains everywhere. And what I mean by that is that you have numerous terrorist groups. You have Iran-backed terrorist groups and militants and militias. You also have Sunni terrorist groups, and they take advantage of that instability. Whenever they see that maybe governments are pouring their resources somewhere, that they might be distracted by something or focused on a certain event or source of instability, they take advantage of that and pursue their own efforts to further that instability. And that doesn't mean that it evolves into a larger scale war or that it devolves things into chaos, but that is their goal. Their goal is to take advantage of that and say, hey, because you've got people not paying attention, perhaps, or you know, it almost feels like a free for all, and so then they pursue attacks of this kind. And so when I saw what happened in Iran, right away it had the markings of an attack made by a terrorist group. It has nothing to do with the relationship right now or the state of affairs between Iran and Israel or Iran and the United States. This is purely a terrorist attack, a terrorist group that took advantage of the situation.
And I want to be clear on that. The latest reporting we have has not even really vague insinuations yet at this point of who is expected to or suspected to be responsible. Have we gotten any updates? Is there any intelligence on who Iran would suspect? Or at this point, is it an absolute mystery and pointing fingers is not useful on that front?
Well, no, pointing fingers is certainly not useful. And it is interesting that Iran has not said anything yet as to what group or who might be behind this. What we have seen in the past is that ISIS has pursued a number of attacks inside Iran. For example, in 2022, they attacked a Shiite shrine where 15 people were killed. And that's in addition to other attacks. And Al-Qaeda, by the way, still operates in Iran. And the attack that I saw today, it bears a lot of the markings of attacks pursued by ISIS. You've seen them do the same thing in Afghanistan when they've seen groups of people, civilians, gather for a certain event. Maybe it's a wedding, maybe it's some kind of mourning or procession for a funeral or whatever it might be. They take advantage of that because they see that it's a group of people and they want to maximize the casualties and death that they seek. And so I can't point the finger at ISIS, obviously, but I can highlight that this is not new to Iran, that we've seen it before with ISIS in particular.
Well, one other point of confusion that I think is an important one as we track broadly everything going on in the Middle East, when we look toward the Red Sea, the news recently from the Houthis armed forces spokesman saying that they targeted the CMA CGM Tage and the French container shipping company responsible for that, saying the vessel did not suffer any incident. The Houthis had said previously they would focus on ships going through there either to Israel or with connections to Israel, but there seems to be some vagueness around who exactly that applies to. I'm thinking from the perspective of companies with ships going through the Red Sea, what is the breadth of who should be concerned? Have the Houthis succeeded in any way targeting ships with connections to Israel, or how widespread are the issues there?
So the situation in the Red Sea is very volatile and it could get worse if the naval coalition that's there now, that's led by the United States, the U.S., grouped together an international Navy coalition to combat the threats that are being posed by the Houthis and those aggressive attacks that the Houthis are pursuing against these vessels. Already you have seen a few weeks ago, you saw the Houthi militants succeed in attacking certain vessels. Now, the U.S. has been very successful at intercepting missiles. Now you've seen this week, for example, Houthis approached a vessel and then they made an emergency call signal to the United States. The U.S. came with helicopters and sank the 3 Houthi militant boats. And so what you see is just kind of constant whack-a-mole effort. And what the Houthis are saying here is that while the U.S. and the U.S. and the International Navy Coalition is succeeding at mitigating this threat and addressing those threats when they arise, meaning when you've got those Houthi militant boats approaching vessels or when they lob rockets or drones or long-range cruise missiles wherever they are lobbing them, including at Israel, they've been able to intercept those. At the same time, you see that the Houthis are not being deterred from pursuing this type of aggression in the Red Sea, which has, as you've noted, real implications for shipping and for, by the way, for global inflation. Obviously, already just in 1 week, freight rates have increased to 2.5 to 4 times fold for what is normal, quote unquote, normal for this time of year, and so. This situation is volatile. When that International Navy Coalition was created, Maersk had resumed shipping in that area along with other shipping companies, for example. And then this week, because the attacks had continued, they and other shipping companies have halted those shipments through the Red Sea and the Suez Canal once again. So this is going to remain very volatile unless the U.S. and other partners take a more offensive approach against Houthi militants and remind them that freedom of navigation is a national security priority.
And can you spell that out a little more for me, Shamali, when you say a more offensive approach, or exactly what should or would you expect to change in the U.S. military's role in the Red Sea?
Yeah, it's a great question. So what you're seeing now are kind of tit-for-tat attacks. You've got the Houthi militants either approaching a vessel with a boat or lobbing some kind of rocket. And in those instances, the U.S. and the International Navy Coalition, they respond to it. So that coalition is not proactively pursuing any kind of offensive airstrikes or other military engagement against the Houthi militants who are based in Yemen and who are funded and armed by Iran. So it's very much a position that's meant to be defensive in nature and to also just not spark something bigger. And that is a risk. And that is something the Biden administration has made very clear. They do not want to spark a regional wide war. They don't want to escalate things further. And so that's why you see when these militant groups, and it's not just in the Red Sea, when you have militant Iran-backed militias and terrorist groups in Iraq and Syria pursuing attacks against U.S. bases there, you're also seeing the same type of response. It's very tit for tat. The U.S. is making it clear, we're not pursuing aggression, you are, and if you do, we will respond in kind. So the responses are very proportionate. But the Houthis are not as armed, certainly, as the United States. They're nowhere near as strong as all of those countries that make up the Navy coalition. And so if they wanted to pursue a more offensive position, they could proactively go and pursue airstrikes against where they see major weapons depots or command centers of the Houthis in Yemen.
And Hagar, bigger picture question for you, for the Biden administration, which broadly had looked to pivot to Asia, just looking at everything that's been in the news for not only this week, but big picture, it seems very difficult for the Biden administration to really extricate itself from the degree of focus on the Middle East to the extent that they wanted to. What position does all of this put the Biden administration in regarding the big picture goals that they have for President Biden's term?
Sure. Well, you know, it's funny. I feel like this is just the story of every administration for the past 10 to 15 to 20 years. When I was at the National Security Council, I was director for Syria and Lebanon at the White House under President Obama. And that is when the whole theme of the pivot to Asia started. It was this sentiment, the Arab Spring was raging. We were unable to affect real change. And it was a sentiment that, you know, the Middle East was really nothing but problems between Iraq and the Arab Spring. It was a drain on our resources. We weren't getting anywhere. We had very few partners to work with. And on top of it, we were losing troops. And so it kind of felt like this massive strain and liability for the United States and where our national security interests were waning. And so there was this pivot the idea of a pivot to Asia. And every time there was this effort to focus more heavily on Asia, something would rope the United States back into the Middle East, whether it was Iran or whether it was something to do with Israel or Syria, for example, ISIS. I mean, all of these major milestones would rope the United States back into the Middle East. And this is a bit of an example of that. However, I will say that while I understand the lack of prioritization on the Israeli-Palestinian conflict, the fact is that, you know, when you have something like this happen, when you had October 7 happen and what happened afterward, that was because not only did Israel take the eye off the ball on the threat that Hamas posed, but so did the United States. And the U.S. also downgraded pursuing a two-state solution because it had seemed it was so difficult and practically impossible to achieve in the 2 decades prior to that. And so that's when you have things that bubble up and then rope the United States back. But that where I see this becoming an issue for Asia is that if I were President Xi and I were watching the United States send its resources to Ukraine and Israel and to be very focused on Ukraine and Israel, it doesn't mean that the U.S. is unable to focus on China or other threats in that region. They're not going to take their eye off that ball. They have huge teams, and that is a very marked threat that they know about. But at the same time, if I were President Xi and I were watching the negotiations on Capitol Hill and how difficult it is to pass aid packages now for Ukraine and Israel, then if I were President Xi, I would think, well, now it might not be such a bad time to pursue some kind of action or maneuver vis-a-vis Taiwan, because the U.S. is taken with these other issues. It's an election year, and the public is not very supportive of sending these massive aid packages. So that's where I could see things fray this year.
That's an important point. And I should sneak in one more quick one with you, Hagar, since we've been leaning on your analysis on Middle Eastern issues. On Iran, you were on Balance of Power yesterday and made the point that if Iran was going to do something with more force, that might have already happened by then. But of course, big news this morning with the explosion. Does that change your mind? Does that change your thinking about a response from Iran and the forcefulness of any actions? If you can give me the 30-second version of that one.
No, I still see, when I saw today's action, to me, it was just yet another effort on the part of a terrorist group to take advantage of this instability. And you're going to see the instability grow. I don't mean to diminish it or to diminish the threats that come from the region. It is going to grow further until things in Gaza calm down. And they're not going to calm down until probably February or March. Now, that's short in the grand scheme of things, but I still don't see a major war.
Right. Hagar Shamali, former director for Syria and Lebanon at the National Security Council, now the founder of Greenwich Media Strategies. Great insights. Coming up, we're going to talk about the U.S.-Mexico border, a key point of negotiation in Congress with the panel. I'm Jack Fitzpatrick. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go until the latest FOMC minutes, and we have got stocks lower across the board. Right now, the S&P is down 21, drop now of 0.5%. Dow Industrials down 0.4%, lower by 133 points. NASDAQ, the composite index, down 113, a drop right now of 0.8%. 10-year yield 3.92% with a 2-year 4.33%. Spot gold down $24 the ounce to $2,034, a drop of 1.2%. West Texas Intermediate crude up 3.5%, $72.83 a barrel on WTI. Xerox shares now lower by 9% after the company said it is targeting a 15% workforce reduction. Xerox, which is based in Norwalk, Connecticut, calls it a reinvention and operating model evolution. Again, Xerox now lower by 9%. Recapping, stocks are declining. S&P down again on the second trading day of the new year. S&P down another 22 points, a drop right now of 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound on Bloomberg Radio.
The new speaker, Mike Johnson, Speaker of the House for a couple months now, is heading down to the U.S.-Mexico border, not only making the point that the president will have to negotiate with Republicans on border security measures and asylum issues, but seemingly staking out a hard position going into an election year. It seems that we will hear a lot about the border in 2024. About 3:30, Speaker Mike Johnson will do a press conference, but we already know that about 60 House Republicans are down in South Texas by the border, drawing attention to that as ahead of them coming back to Washington next week in the House of Representatives. I'm Jack Fitzpatrick from Bloomberg Government, sitting in for Joe Matthew today, and I'm here with our Bloomberg Politics contributors, Jeannie Sheehan Zaino and Rick Davis. Really looking forward to getting your insights on the politics at play, the policies that could come about, because this is not just politics. This is an active legislative negotiation as Congress negotiates what they have said would be a combined border security and Ukraine aid measure. Rick, it does not seem that Republicans are changing their position, moderating their position at all. What should we take away from the fact that well into these negotiations on border issues, you have a large group of House Republicans going down to the border, putting a spotlight on the issue? To me, it seems that a sign that they are not moderating. But what do you take away from this point of emphasis from the new speaker here?
Yeah, I think the point you make about them not moderating, I think they are kind of the tip of the spear with Republican strategy right now. You know, and taking 60 members, as you mentioned, down to Eagle Pass in the Texas border, one of the most active border crossings in the entire country, is meant to kind of shock the system, right? Here we've got all these legislative agenda items due here in Washington, and here we got a third of the Republican caucus down on the border. That gives great high cover to Jim Lankford's Republican senator in the Senate, who has been spearheading the talks with Chris Murphy, Democrat, and Kristen Sinema, the Independent, on trying to get a package deal where border security is added to the Ukraine and Israel funding. So those two are working quite in tandem, and I think the more pressure on the administration to come to the table in a compromised position, the better off you are. So the House is trying to push the outside envelope on policy, while it gives some room in the Senate for them to negotiate.
Jeannie, there's the policy side, the legislative negotiations happening in Congress. Even as they're out, there are still a few senators in Washington discussing this. And then there's the politics side. It's 2024. It is an election year not only for these House members, but for the president. To what degree do you see the hardline Republican stance demanding something on the border as genuinely simply a negotiation on a bill versus Is this about 2024? Is this about Election Day? How do you separate, if at all, the policy and the politics at play here?
Yeah, it is so hard to do. I mean, we do see a real effort on the part, as Rick mentioned, of Langford, of the Democrats and the independent Kristen Sinema, Chris Murphy, trying to negotiate. But the reality is, if there is a deal to be had, it is simply not enough to get something out of the Senate, even if they can get 60 senators. You've got to get it through the House. So what I really, really wish the president would do is he would call the House Republicans bluff. He would say, absolutely, let's deal. Give them what they want. Can you imagine if he said, we'll give it all to you. We will pass comprehensive immigration reform. They will not buy it because their focus is on using this for political reasons. And of course, as we've been hearing in the last 24 hours, of impeaching Mayorkas, the head of Homeland Security. The first time they're going to impeach a cabinet level official since the late Civil War period. That's their focus. Marjorie Taylor Greene said she was promised, and we hear January 10th, they hold their first hearing on that. But I do wish the president would call their bluff and say we should act, give them what they want, and see if they bite. I guarantee they won't, and nor will Donald Trump let them.
A gutsy recommendation from Jeannie. I see the logic there. Rick, I think this all begs the question, who is actually in charge? You mentioned James Langford taking the lead on the Republican side in the legislative negotiations, but when it comes to the question of if there is a realistic chance that they can pass something in the House and Senate, is it James Langford we should be looking to? Is it Mike Johnson we should be looking to? Who is the key person who's the most important X factor among Republicans in terms of if something can be enacted?
Look, I mean, we look at this as a legislative debate right now in Washington, but I would just, as a parenthetical, point out that somebody else who's playing a game on this, and it's an important game and a high risk, is Governor Abbott in Texas. He has launched, what he calls the Operation Lone Star, and he's putting $10 billion to work on the border, basically usurping federal authority. The federal government is responsible for immigration, and basically what Governor Abbott has said is they've failed in their duty, and I'm taking action as a governor. This puts even more heat on Republicans to act in the Senate, because the last thing they want is all these governors having, a hodgepodge of policies on the border. They want the federal government to act. And even Democrats are looking at this saying, oh my God, we cannot let this issue slip. As you pointed out early in the segment, Jack, this has become a hot button political issue. It's always been important to border states like Arizona and Georgia, where targeted presidential states. But the reality is more and more Americans are saying that immigration issues are, they're number two right behind the economy. And so everybody's got something at stake here. I would say, like what Jeannie suggested, I think Biden's going to have to articulate what deal he's willing to have Democrats accept, because otherwise, if left just to Chris Murphy to cut a deal, he may not get a deal. And the only thing that's bad for Biden is if no deal gets done, and then no funding for the border, no funding for Ukraine, no funding for failure since his term began.
And Rick, go a little deeper for me on the role of Governor Abbott, and can you spell out the motivation there? Is he pushing this so much out of a motivation to put a major national spotlight on the issue of immigration? Is it a particular deal that he wants to see Congress strike? Is it a political spotlight on himself? Explain that power of Governor Abbott for me a little bit more.
Yeah, Jack, all of the above, right? You hit the nail right on the head. I mean, this guy is shipping immigrants all over the country via buses and planes. I don't think there's a single market that hasn't been affected by this in Democrat-run cities all across the country. He has gotten a spotlight on the state of Texas by putting barriers in the Rio Grande. I mean, he has done more to bring to attention the trials and tribulations of this border problem than anybody else. A border problem that, at best, the Biden administration has just hoped would go away and has only gotten worse. So if there's a face behind broken immigration policy and the sort of political attack machine that Republicans have on this, it's Governor Abbott. And I think he's done a really amazing job of elevating this into the political debate.
Now, I know it's a completely separate legislative topic or policy topic, but legislatively, the border has been tied to the fate of Ukraine aid, so I think I'd be remiss not to ask about where things stand there. Jeannie, there seems to be an undercurrent of maybe the idea that a lot of Republicans would be perfectly fine seeing Ukraine aid fail, at least specifically the Biden request for Ukraine aid fail. How should Democrats approach this issue? Should they be looking for an alternate route to get rid of this tie between these two issues? What are the options on Ukraine for Democrats, given the seemingly intractable nature of these border talks?
Yeah, and it was such a idea to bundle them together was so sort of experimental in that regard. And if none of this gets done, it's going to be seen obviously as a failure. You also have some Republicans like Mitch McConnell supporting Ukraine aid. And so I do think that they should handle these separately at this point. We need to get aid to Ukraine. We need to get it to Israel. It needs to be for Taiwan. The border has been a vexing problem in this political year. It needs to be resolved, but I can't see getting major comprehensive reform legislation at this point. And so I do hope that they, sort of disentangle those. I don't even know if that's a word, Jack, but do those separately so they can get the aid they need to Ukraine and also free up the Biden administration so they don't have to end run around Congress to get aid to places like Israel and Ukraine that's desperately needed.
I'm giving you a pass on disentanglement. Jeannie Sheen Zaino, Rick Davis, we're going to talk about the president's major upcoming speeches shortly. But first, let's get a check on world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington.
Thanks, Jack. The killing of a senior Hamas leader is sparking fears of an escalation between Israel and Iran-backed militant group Hezbollah. Israeli forces have not confirmed they were behind the attack. Norman Rule is with the Center for Strategic and International Studies.
This drone attack, which Israel has not admitted but is understood to have undertaken, took place in an incredibly security-conscious neighborhood, and it demonstrates an exquisite and dynamic intelligence capacity. So as Hezbollah thinks about its response to this, it's got to think about what is known around us and what can we get away with, and what will happen to the people who might be involved in that attack against Israel.
Again, Norman Rule, who spoke with Bloomberg Surveillance. Fewer workers have quit their jobs and job openings have decreased, this according to the latest government report, and manufacturers report an optimistic outlook.
The manufacturing index compiled by the Institute for Supply Management improved last month. Timothy Fury, who chairs the group conducting the survey, commented in a Bloomberg interview.
Although the new order number did come down, there was enough new orders and stable production output to slow the rate of backlog decline, which is really good. New export orders improved. Given the signaling that's happening here, I would expect that demand is going to improve in the first quarter for sure.
Fury said investment in new facilities is rising and interest rate cuts would provide an additional boost. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ 100 index. Yes, the Russell 2000, all in the red right now. We are looking at a 23-point drop in the S&P, down by 0.5%. We are 20 minutes away from the latest FOMC minutes. We've got the Dow down 148, lower now by 0.4%. NASDAQ, the composite index, down 121, down 0.8%. The NASDAQ 100 index, full of big tech stocks, lower now by 0.8%. Russell 2000 down 1.5%. Spot gold now down $24 the ounce to $2,035, a drop of 1.2%. Bitcoin down 5.4%, now at 42,692 on Bitcoin. 10-year yield 3.93%, and the 2-year 4.34%. Today's data on the U.S. economy is lackluster, and with that story, here's Bloomberg's Vinny Del Giudice.
Job openings eased in November, falling to the lowest since March 2021. That adds to evidence demand for workers is ebbing. U.S. manufacturing is in the doldrums, too. The ISM Factory Index signaled contraction for the 14th month in a row in December. In the property market, mortgage applications dropped for the second time in 3 weeks. Vinny Del Giudice, Bloomberg Radio.
Dyne Therapeutics shares are seeing their biggest gain on record after the drug developer announced initial data from trials of 2 of its therapies for patients with muscular diseases. Shares of Dyne Therapeutics, ticker DYN, they are trading higher now by 12.98%. So again, recapping, U.S. stocks lower ahead of the Fed minutes, 18 minutes to go. S&P down 22, drop there of 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On Bloomberg Radio.
President Biden is gearing up for a couple of major speeches. On Saturday, he's going to Valley Forge, Pennsylvania, which you may have read about in a history textbook at some point, to go after former President Trump on the issue of democracy. That Saturday is the 3rd anniversary of the January 6th, 2021 assault on the U.S. Capitol. And then Monday of next week, President Biden will go to South Carolina, where he'll speak in Charleston at Mother Emanuel AME Church, the site of the attack a few years ago by a white supremacist. I am here, Jack Fitzpatrick sitting in for Joe Matthew. I'm here with our political panel, Rick Davis and Jeannie Scianzano, for more on what to expect from President Biden, what this means as we head into 2024, and if it works. Jeannie, let's start with you. What exactly is President Biden's pitch on extremism, on democracy, on January 6th? And so far, because this isn't the first time he's talked about these issues, is there evidence that this resonates with swing voters, with motivating voters? Does this stuff work as we head toward Election Day 2024?
Yeah, I think it is an inkling of what we're going to see as we go throughout the next year from the Biden campaign. I think the evidence yet, whether it works or not, is a bit mixed. So we did see it was somewhat effective in the midterm election of 22. It became a theme in the 20 election and obviously boosted by the events of January 6th. But, the reality is when it's been tested more recently, like I'm thinking of Ron Johnson's election, Democrats decided not to push on the issue of democracy and election denialism and misinformation, and to focus more on the economy, because when they tested it out in Wisconsin with those all-important moderate and independent voters, it wasn't as successful. So I think it is a mixed bag, and we don't know quite yet if it's going to work. But I do think what the Biden administration is hoping for beyond that is they feel that any time they can bring the chaos of the Trump administration back into people's minds, it's a win for him. Biden doesn't want the focus on himself. He knows that he has weaknesses, age, and others. but Donald Trump is even less popular, and he thinks he won before. He can do it again if he can just remind people of all the chaos that was Donald Trump's presidency and the fact that they don't want to go back there. So I think they're going to be tying 6 to Trump and the chaos of the administration as much as they can, starting this weekend on the anniversary and continuing through the rest of the year if Trump indeed does become the Republican nominee.
The Ron Johnson example is an interesting one, Jeannie. Rick, does anything else come to mind in terms of what we learned in 2022? Because this did come up on the campaign trail in 2022. Obviously, the January 6th attacks, the questions about, as Jeannie described, sort of the sense of chaos during the Trump administration. How did things play when it comes to the democracy arguments, the January 6th arguments in 2022? Do we have any other case studies? What did we learn 2 years ago about this?
Yeah, look, I think that according to the polling data, it's played an important role as a sort of tertiary issue, right? For, everybody, the economy was number one, and then for Democrats, abortion was number two, and the border for Republicans was number two. And what's interesting about democracy issues is both Donald Trump and Joe Biden and their supporters all agree that democracy is important. They just have a totally different view of what that democracy is. And I think you'll see Donald Trump talk as much about the threat to democracy being Joe Biden as Joe Biden talks about the threat to democracy being Donald Trump. And I think this turnabout by the Trump campaign is actually the newest development. This is pretty consistent with Joe Biden's approach over the last 2 years, as you point out, Jack. But the fact that Donald Trump is not giving ground on this and is actually going to say, no, the real threat to our democracy is Joe Biden, really, I think, creates a mixed bag for this issue.
And do you mean focusing on the Colorado and Maine ballot issues, or what is the counter argument from the Trump side on this?
No, look, I think that what Trump is trying to say is that Joe Biden's stewardship of the country has made it more vulnerable and has decreased its resiliency in the democracy. And he continues to point out that he won the election and Biden is standing in the way of that. And I think what they're pivoting on is what you point out, which is the attacks on Colorado and Maine and 14 other states that have challenged Trump's access to the ballot is kind of like not fair play by American standards, right? I mean, like, sure, there are issues with Trump's conduct around January 6th. But I think most Democrats I've heard from who've spoken out on this have actually sided with Trump on the idea of he ought to be on the ballot. So this idea that you're going to use extra electoral activity like the judicial process to ban him from the ballot, I think has spurred him to get into the democracy debate.
And Jeannie, we talked yesterday with some polling coming out on Biden's struggles with what he would hope would be base supporters, weaknesses among black voters, among Hispanic voters, among young voters. Going to Charleston seems obviously to be a very clear appeal to black voters. But do you see any signs within this broader, emphasis on these issues by Biden? Do you see an attempt to win back some of that base support that he seems to be losing, Jeannie?
Yeah, absolutely. I think this may be, and Jack, you may know better than I think this may be his 4th visit to South Carolina. And he is absolutely cognizant of the need to shore up his base. That includes African Americans, Latinos, as we talked about yesterday, young people. So I think the speech on Monday is absolutely an attempt to show young people and African Americans in particular on the issue of race and on the issue of guns, that he has not forgotten about what they care about. And he is who he was when he ran in 2020, and that he is there to support them. So I do think we're going to hear more on that. I don't think we've seen signs yet that it's been effective, but I think the campaign feels like they do have some time on that. I think their real frustration is on the good economic numbers, not really sifting into the public consciousness yet, but they feel like maybe over time as well, if they can message appropriately, they can have some movement there. So I think they are hopeful. But again, I think when you get down to it and just listening to Rick and you talking, it's going to be really about, Trump saying Biden's the worst thing for democracy and Biden saying Trump's worse. And it's going to be
A clear battle on that. Jeannie Sheen Zano, Rick Davis.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 7 minutes away from the latest Fed Minutes. Walt Disney says it has won the support of Value Act Capital Management for its board nominees and will consult with the activist investor on strategy as the world's largest entertainment company responds to pressure to boost performance. Today, on a down day for the rest of the market, shares of the Walt Disney Company are up by 0.9%. Meanwhile, Morgan Stanley Executive Chairman James Gorman will be joining Disney's board next month, and he spoke with Bloomberg Radio this morning in an exclusive interview with Shernali Basak.
I'm looking forward to it. I like dealing with complex situations. The changes going on in that industry are profound, and there are choices to be made. So that to me is very interesting. And obviously, given the experience I've had leading succession with our board here, with Dennis Nally, the head of our comp committee, and Tom Gloser, the head lead director, hopefully I can add something to the succession committee that I'll be joining.
And Morgan Stanley shares down now by 1.4%. Elon Musk's SpaceX has launched its first satellites capable of offering mobile phone service as the company races to bring more connectivity to remote areas. SpaceX working with T-Mobile to provide service. Some of the other stories we're following. Shares of Ambarella are trading lower today after Wells Fargo Securities downgraded the chipmaker to equal weight from overweight. And those are some of the top company stories that we're following at this hour, and this is Bloomberg.
You're listening to Bloomberg Sound on Bloomberg Radio.
Just a few minutes left until the minutes come out from last month's FOMC meeting. We'll speak with Anna Wong, the chief U.S. economist at Bloomberg Economics, when they do come. I'm Jack Fitzpatrick from Bloomberg Government, filling in for Joe Matthew here. We will get the latest on the FOMC minutes and also get a little deeper into border issues in the early part of the next hour with Enrique Morones from Gente Unida, the Human Rights Border Coalition. But first, let's hear from Nancy Lyons with a check-in.
Thanks, Jack. 2 explosions near the grave of Iranian commander Qasem Soleimani have killed more than 100 people, injured more than 170. Today marks the 4th anniversary of the attack that killed Soleimani. The senior officials describing the blasts as a terrorist attack. State TV reports the explosions happened within 15 minutes of one another outside the graveyard in the central province of Kerman. The head of Iran's judiciary is vowing to punish the perpetrators without saying who that might be. Another legal battle is set in motion involving Donald Trump's eligibility for office.
Trump is not just appealing the decision in Maine to remove his name from the primary ballot. He's also suing the official, Maine's Secretary of State Shanna Bellows, who made that decision. It's another legal argument that will likely be settled by the U.S. Supreme Court, along with a case from Colorado, where a group of voters is calling for the justices to quickly step in. They're asking for that case to be expedited. They'd like a ruling by February 11th, and we could learn whether the Supreme Court will intervene in the Colorado case by this Friday. In Washington, Amy Morris, Bloomberg Radio.
Another top Republican is now endorsing Donald Trump for president. House Majority Whip Tom Emmer announced today he's backing the former president, solidifying support for Trump among all 5 members of the House GOP leadership. Emmer's endorsement is notable as Trump helped tank the Minnesota Republican speakership bid last year. President Biden will take aim at his top Republican challengers, Donald Trump and Nikki Haley, with back-to-back events highlighting their vulnerabilities in a general election contest. On Saturday, he plans to speak near Valley Forge in Pennsylvania, a Revolutionary War site where he will mark the 3rd anniversary of the January 6th assault on the U.S. Capitol. He'll cast Trump as a threat to democracy. He'll echo that message in Charleston, South Carolina Monday when he goes to the historic black church where white supremacists killed 9 people in 2015. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Jack.
Thank you so much, Nancy. Hour 2 of the fastest show in politics is right ahead, as well as those Fed minutes from last month's FOMC meeting. Bloomberg spoke earlier today with Morgan Stanley Executive Chairman and former CEO James Gorman. Here's what he had to say about what's ahead for Fed rates in 2024.
First half of the year, I suspect nothing. Back half of the year, they could easily move a couple of times. We started this journey with inflation at 10%, rates at 0, unemployment at 3.5%. And my objective was to get us to 4, 4, and 4. 4% inflation, 4% rates, 4% unemployment. We're about 3% inflation, we're 5%, 5.5% in rates, and we're about 3.5% in unemployment. So rates will come down.
And we'll have more from Anna Wong again in just a few minutes, the chief U.S. economist at Bloomberg Economics, on the takeaways just after 2 when the FOMC minutes come out from the mid-December meeting. Also ahead, Enrique Morones from Gente Unida, executive director of that Human Rights Border Coalition, as we get into the substance of the negotiations, not only the negotiations in Congress and what's to come for border and Ukraine negotiations, but what exactly is happening at the border with a surge of people coming across that congressional Republicans have been very forceful in demanding change from the Biden administration. Thank you again to our guests from the first hour, Hagar Shamali, with great insights on the latest developments in the Middle East. Of course, Rick Davis and Jeannie Sheehan Zaino, our Bloomberg Politics contributors. Looking forward to those FOMC minutes and the takeaways. Coming up soon from Anna Wong, Chief U.S. Economist at Bloomberg Economics. With Bloomberg Radio, I'm Jack Fitzpatrick. And of course, Hour 2 of Sound On starts right now.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself.
Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Jack Fitzpatrick from Bloomberg Government sitting in for Joe today. We're going to bring on Anna Wong, Chief U.S. Economist at Bloomberg Economics, to discuss the headlines coming out now on the Bloomberg Terminal on the Fed minutes from the December meeting of the FOMC. First one I see, officials saw policy rate likely at or near peak. And of course, we'll go for more to Charlie Pellet for a look at those FOMC minutes.
I thank you very much. And here's what's going on. We begin with headlines from the Bloomberg Professional Service. Fed minutes say officials saw the policy rate likely at or near a peak. Officials acknowledge projections do show cuts by the end of 2024. Several members said the rate could stay at peak longer than anticipated, and Fed officials saw policy remaining restrictive for some time. In terms of the equity market response, right now we have got the S&P down 25, drop there of 0.5%. 10-year yield 3.92%. The 2-year 4.34%. Stocks have been trading lower across the board. S&P, as I mentioned, down 24, drop there of 0.5%. Dow Industrials down 176, drop there of 0.5%. While the Nasdaq Composite Index down 129, a decline of 0.9%. So again, on this FOMC Wednesday, 10-year yield 3.92% with a 2-year 4.35%. Well, as for the Federal Reserve and the outlook there, Torsten Slok is chief economist at Apollo Global Management, and he was interviewed ahead of the minutes this morning on surveillance.
Of course, for the better part of the last year, we have talked about higher for longer. Now the conversation is more restrictive for longer, because they can still be restrictive if inflation is coming down, because real interest rates is what matters. So if real interest rates are still positive as inflation comes down, the Fed can accordingly also gradually begin to lower rates.
And again, the headline from the Bloomberg Professional Service, Fed officials did see policy remaining restrictive for some time. We've got more on the FOMC meetings with Anna Wong of Bloomberg Economics coming up shortly. So again, turns out to be a down day for the U.S. stock market. We've got gold down 1.2% right now, $2,034 the ounce. West Texas Intermediate crude up 3.3%, $72.70 a barrel. And Bitcoin cannot ignore the losses in Bitcoin today, now lower by 6.3%, 42,311 on Bitcoin. Again, recapping, stocks lower, S&P down 26, drop there of 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie. Jack Fitzpatrick from Bloomberg Government hosting today instead of Joe Matthew. And I'm here with Anna Wong, Bloomberg Economics Chief U.S. Economist, for the initial takeaways. You just heard the initial headlines from Charlie there. First, high level, what's the biggest news from these minutes in your view? What's the main takeaway from December?
Right. Like you, I just heard the initial headline, and I think the biggest takeaway from our news reporter is that several officials see rates staying at peak level for longer. And at first glance, it seems that the takeaway is that the minute's tone is more hawkish than how Jerome Powell sounded like back in December.
I see the headline, cuts. Projections show cuts by end of 2024. What is your view on the most likely route of when cuts occur? Are we talking late 2024? What have we learned about the timeline there?
Right. The Fed had published in their dot plot back in December, they expect 75 basis points of rate cuts, and that could come in the second half of 2024. If I'm guessing that several of the officials think it will. Those 75 basis point will happen towards the back end of 2024, and there's no reason why the minutes would differ from what the dot plot had indicated, right? But the question going into this always is, should we believe in what the Fed officials are saying? And the bond market traders did not believe in these numbers. The bond markets believe that the first rate cut could come in March 2024. Right now, the probability of a rate cut in March 2024 is about 70 to 80%. It used to be even more priced in back in December. They already pared back that bets already in the last couple of days. But I think the minutes did very little to the minute did very little to support what Powell says, because Powell was very dovish, right? And the minutes seems to be more of sticking to the dot plots numbers, saying that, you know what, don't be too optimistic about rate cuts too soon.
And a lot of this conversation is about the length of keeping them near their peak. But just for my understanding, what's the prevalence among voting members of any push or any openness to further increases? How significant is that?
Definitely. I mean, if you look at the dot plot, you could see that I think there was a sizable group that sees 75 basis point rate cuts, but there were, I believe, at least four or some who see more. In fact, there was one who actually see 150 basis point of rate cuts in 2024. I think, so for my own takeaway, I think that the FOMC minutes is actually a communication tool that you can think of it as another speech by the Fed officials, another way that they could twist the message. But what they will actually do is not really dependent on what this minutes will say. And in fact, New York Fed's own research shows that typically in easing cycles, the Fed internal deliberations much more dovish than these public communications. So my view is that the Fed is still likely to cut in March 2024 for the reason that the growth is faltering. And I think the data in the next 3 weeks would be quite critical because, for example, this Friday with the jobs report, if we do see significant weakening, then I think the bond traders will be putting back on that trade of March rate cuts, even January rate cuts.
Right. Anna Wong, thank you so much for great, very immediate insights on those FOMC minutes from December on some fairly hawkish language, but good insights on what to expect as early as March from Anna Wong. Now let's bring in Enrique Morones, Executive Director from Gente Unida, the Human Rights Border Coalition. We spoke in the last hour on the politics of some of these congressional negotiations on the border, but I want to cut through some of the political language as much as possible and learn a bit about what's happening on the border, what the causes are, what the policies at play are. Enrique, thank you so much for joining us. Given your long work on these issues and communicating with people who are seeking to come to this country, I'm curious what you make of what's in the news with regard to congressional negotiations. Have you heard of any policy changes, especially when Republicans push for third country, keeping asylum seekers in third countries? Do you see any solutions being discussed in Congress, or are they missing any of the root causes? What should we know in Washington about the root causes of people coming to the U.S. seeking asylum in particular?
Yes, glad to be with you. I have been on the border all my life. As you know, I have been working to help the situation along. And I don't think that the Republicans coming to the border to speak to the Border Patrol is the answer. How come they never speak to the migrants themselves? They don't want to become citizens. They want to become residents. They're looking for a life, not necessarily a better life, but a life to escape the violence, the environmental situation, the politics. And much of that has to do with the United States. The United States has 4.5% of the world's population, yet it consumes a third of the world's illegal drugs. It consumes a third of the natural resources. It provides weapons to these countries. That is not the solution. The solution is to work with these countries, come up with a plan that makes sense to both countries. Comprehensive immigration reform is something that a lot of people have battled for a long, long time. And we're not any closer today. I think both the Republicans and the Democrats have done a bad job. And I believe that the solution will be coming in the next administration. Hopefully it will be Biden, but I don't think Biden or Trump will be the candidates. I think they're both not going to be there for 2024. Trump because of his legal problems and Biden because of his health. So I hope that we really do have humane immigration reform. I'm right here on the border, and not one of those migrants has said, I want to become a citizen. They just want to get their papers so they could come here and be saved. It's a worldwide situation. It's not that just the U.S. and Mexico. And here on this border, U.S. and Mexico, never is there a bigger difference of the two countries. The United States being the most powerful country in the world and Mexico being a developing country. Neither country is bad, but let's have humane immigration reform, more asylum judges, more immigration attorneys. That is the real solution.
Enrique, what do you make of especially the push from Republicans for asylum seekers who have traveled through another country where they may be eligible for asylum? They want to stop people from coming to the U.S. if they have traveled through another country where they could have sought asylum. This is, I think, maybe sort of tangential to the quote-unquote remain in Mexico policy. Do you see that as effective? Is that something that you can easily apply to people who are seeking to come here? What's the actual effect, and is that feasible in your mind?
Well, a lot of people are actually looking for asylum in Mexico, and Mexico has granted asylum. But I think that the United States should be more forgiving of these people and let them have an asylum hearing. It's a terrible situation for them. Mexico has done a really bad job. I think AMLO, the president, is not doing a very effective job. I don't think Mayorkas is doing an effective job either. But we got to stay away from Trump. He was very dangerous, separating families, shooting people through the border wall, and so forth. But let's think of 2024 and beyond. I think that we should have more humane immigration reform. This is a worldwide situation. It's not just here on the Western Hemisphere. It's also happening in Europe and other parts of the world where there's more migration than ever because of the environment, the violence, the hunger, and so forth. Let's provide humane immigration for these people. We have plenty of space. Yes, it's a challenge, but we can't be using these political ploys like Abbott and DeSantis are with using the migrants as political ploys and busing them or flying them to other states. That is not the way to do it. We should have a solution. We have had many attempts at this for many decades, and I know that we can do it. It's good. It's going to be a binational situation that we have to work on. And I know the United States and the other countries can do it. Sí se puede.
Enrique, could you tell us a little more about especially what has happened in the past few years? What are the underlying causes in South and Central America driving the recent border surge? What are those root causes?
Well, those causes, not only there, but also in Africa and Asia, is the environment, the fact that there's environmental challenges. The United States is more responsible for environmental damage than any other country in the world. When you talk about it per capita, it's also the situation with lack of resources to provide jobs for them. It's also the situation of violence in their countries. These are all situations that are happening all over the world. And the United States and the country where they're coming from have to do a better job. And they can do a better job. Remember, years ago, we had this issue with Colombia, and Colombia was able to straighten it out. We also had the situation in other countries, and we were able to straighten it out. We should not be pitting this with giving aid to Ukraine or the Middle East. They should be separate issues. This should be separate issues. The United States is a much greater country than that. Most of the people in this country were once immigrants. Before we were us, we were them. And we were able to settle this issue. Now is no different. It is a situation in which the whole world seems to be closing in on them and nobody wants to help them. We believe that we should have humane immigration reform. Love has no borders. And of course we want security. But most of the migrants are not a problem as far as security is concerned. Domestic terrorists are more of a problem. And we need to look at the realities of the situation, not the myths.
And given your firsthand knowledge of the situation, I know this is discussed a lot in a political lens, but in the reality of it, can you, Enrique, tell us a little bit more about the state of people who make it to the U.S. when they seek asylum, when they either cross the border or present themselves at a crossing point, in terms of their safety? A lot of them have made it through a dangerous area, are paying somebody to bring them here. Tell us a little bit about the state of safety and well-being, or sometimes lack thereof, of people when they arrive finally at the U.S.
Well, we have a situation right here in San Diego. Only an hour from us is Jacumba. And Jacumba is where a lot of the migrants have crossed. That's in the U.S. And they cross over there and they're left out in the open. It's freezing at night. It gets very hot in the day. And we need to have a situation where these people can have shelter. They should be treated in a humane manner. They don't know what's going on. They speak different languages, Chinese, Spanish, etc. And the culture is very different. For example, if the person is from southern Mexico, when the Border Patrol tells them, look at me when I'm talking to you, that's a sign of disrespect in their culture. So there's always this game going on where people don't know how to respond. We need to be more sensitive to these people. The overwhelming majority of them are just looking for a life. I was at a synagogue recently, and somebody said, I saw you on TV the other day. I don't know why these children are coming unaccompanied. And I said, you know the story of Moses better than I do. And when Moses' mom put him in the river to go to cross the river, she didn't know if he was going to live or die. But she knew that if her baby stayed in Egypt, he was going to die. It's the same situation. It's an act of love. So we should be responding in the same manner. We are a country that has had the history of welcoming migrants. Sometimes we haven't always welcomed them. Look at the Canadian border. There's no wall with Canada. It's twice as big as the length of the Mexican border. And we know a lot of people have been going through there. This is really race-based. It's unfair. And we all need to do a better job.
Enrique Morones, Executive Director of Gente Unida, the Human Rights Border Coalition. Thank you so much for joining us. Coming up, we're going to talk to Wendy Benjaminson, the Bloomberg Washington senior editor, on Nikki Haley doubling her fundraising total and the moves she's making. With Bloomberg Radio, I'm Jack Fitzpatrick. Stick with us.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. A second trading day of the year, FOMC minutes Wednesday, and stocks are lower across the board. S&P right now down 26 points. That is a drop of 0.6%. Dow Industrials lower by 197, down 0.5. NASDAQ, the composite index, down 144, drop there of 1%. NASDAQ 100 index lower by 0.9%. 10-year yield 3.91%, with a 2-year 4.33%. Spot gold down $24 the ounce to $2,034, a drop of 1.2%. West Texas Intermediate crude up 3.2%, $72.65 a barrel. Bitcoin right now down 5.5%, 42,630 on Bitcoin. Federal Reserve policymakers agreed last month that it would be appropriate to maintain a restrictive stance for some time, while acknowledging they were probably at the peak rate and would begin cutting in 2024. So where do the minutes leave speculation about those rate cuts? Anna Wong is chief economist at Bloomberg Economics, and she was a guest moments ago right here on Sound On.
So my view is that the Fed is still likely to cut in March 2024 for the reason that the growth is faltering, and I think the data in the next 3 weeks would be quite critical because, for example, this Friday with the jobs report, if we do see significant weakening, then I think the bond traders will be putting back on that trade of March rate cuts, even January cuts.
Right. And again, we've got the 10-year at 3.91%, the 2-year 4.33%. Xerox shares are lower after the company said it is targeting a 15% workforce reduction. Xerox down now by 11.9%. Again, recapping stocks lower. S&P down 28, drop now of 0.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On Bloomberg Radio.
$24 million in the fourth quarter raised by Nikki Haley, she announces. That is double the amount from the previous quarter, a sign of momentum. I'm curious if that momentum is going to continue or was interrupted at all by the snafu on the exact causes of the Civil War and the motivations of the Confederacy. We'll get down to business on how much momentum Nikki Haley has. Now, with Wendy Benjaminson, Bloomberg Washington senior editor, thanks so much for joining us. The money's there to say that there's momentum for Haley. There seems to be a couple different routes taken by the non-Trump alternatives for the Republican nomination. Mm-hmm. Haley's pretty focused and looking better in New Hampshire. DeSantis looks almost all in on Iowa. Is there an answer right now to the question of who's the main challenger to Donald Trump in that Republican primary?
Well, anything can change at any moment, and I think Nikki Haley's remarks, as you pointed out, about the Civil War, Jack, are exactly the kind of thing that makes that question difficult to answer. But if you had to pick right now, is Haley or DeSantis, Nikki Haley or Ron DeSantis, the heir apparent to the number 2 slot behind a guy who has more than 50% of the vote right now, I would say that Haley has more momentum. DeSantis has had terrible organizational problems with his campaign, staff problems. He is all in Iowa, and I think if he doesn't do well in Iowa, then I think his campaign will likely start taking another look at whether it's worth throwing good money after bad. Nikki Haley was doing so well in the debates and, taking this stance of criticizing Trump without going full Chris Christie, that she was gaining a lot of support among Democrats and independents who were willing to vote in the Republican primary in states where that's possible so that they could stop Trump and make her the alternative to Biden. Whether or not, and let me just add that our Bloomberg News Morning Consult polls have shown a steady rise in support for Nikki Haley among Democrats and independents, or a favorable view, I should say. So with the Civil War comment and following up with her comment that she would pardon Trump if she became president, I'm going to be eager to see whether Democrats and independents take a pause and say, maybe she's not much of an alternative at all.
Well, in the big picture, I'm really fascinated by the discussion about support coming from independents or Democrats who can sign up to vote in a Republican primary in certain states,
including New Hampshire.
Including New Hampshire. Isn't that just evidence that Donald Trump has become the mainstream Republican Party so much that to be the Trump alternative almost means to not be a Republican? I mean, am I missing something when I see a bunch of people who it looks like the only route to really challenging him is to not fully be a Republican?
Yes, I think you're right. I mean, in the last 8 years, the Republican Party has become the party of Donald Trump. And any people like Mitt Romney, Liz Cheney, I mean, people who are, known as conservative, wouldn't go as far as icons, but conservative leaders, thought leaders, are now considered pariahs or at least outsiders. So the Republican Party is the party of Donald Trump, and anyone who's trying to stop him risks being treated as an outsider. And Nikki Haley is trying to toe that line very carefully, and I think that's what was happening with the Civil War and the pardon thing. She doesn't want to anger Trump's voters, but by doing so, she's chosen not to get that crossover support, which would be ephemeral. I mean, it wouldn't last beyond that primary, even though it would give her the momentum to move forward.
So let's talk about possible losses and subsequent decisions, because you kind of hinted at it on DeSantis. I mean, what do we know, or what's our best guess about if things don't go well for Haley in New Hampshire, if things don't go well for DeSantis in Iowa? Are there campaigns that at this point in the back of their mind are thinking about closing up shop if they don't get a victory soon?
I think that's true. I don't have reporting specifically on that, but I do think that is traditional about campaigns. Let's try Iowa. If we don't do well in Iowa, maybe DeSantis will try to best Nikki Haley in New Hampshire. Remember, they're both running for distant second place. Nikki Haley will probably stay in through her home state of South Carolina, which comes right after New Hampshire, or several weeks after New Hampshire. So she will probably stay in. If she doesn't carry her own state, where she was the governor, it would seem it would take a lot for her to come up from the teens level support she has now to best Donald Trump. And DeSantis, I don't know that he would bother to compete in Florida unless some real money started pouring in, which isn't happening.
Do you buy the argument from Chris Sununu that Chris Christie dropping out might help Nikki Haley in New Hampshire enough to give her a chance at winning? I mean, are the votes there in Chris Christie's hands that are the difference maker for Nikki Haley?
Both of Chris Christie's voters, yeah. I think that would have been true and smart of him to do it, because I think, all joking aside, he had 10% or so in New Hampshire. So if he dropped out before the Civil War and pardon comments, I think that would have boosted her a lot. Right now, I'm sure he's thinking, well, why should I drop out? I'm now the alternative that a Democrat or independent could vote for.
Right. Well, let's talk about the Democrats' plan. The latest plans from President Biden pivoting toward 2024, a speech at Valley Forge, Pennsylvania, where he plans to go on the attack against former President Trump on the issue of democracy. It's the third anniversary of January 6th, 2021, then going to Charleston, South Carolina, to the church that had the attack a few years back by a white supremacist. What is the level of efficacy of these democracy, January 6th focused arguments from President Biden? Is this going to his base? Is this motivating people? Is it getting swing voters? How does this work in 2024?
Right. Well, he's certainly trying to motivate and hold on to his base. I think the democracy one it sounds really good, and the White House made a point today of putting out a statement that he was lunching with historians and scholars to talk about democracy. I'm not sure why. I mean, the President of the United States has a basic understanding of democracy. So they're making this point that he's going to focus on democracy. The trouble is, whose minds are you changing? And does that motivate young voters and voters of color who are leaving the Biden camp? and maybe probably not going to Trump, but staying home, does that really motivate them to get out to vote? And I think that's what we'll see after the Valley Forge speech. And with the South Carolina speech, he's clearly acknowledging, one, that Nikki Haley is a candidate in the race. So he's going to her home state where she took down the Confederate flag as governor from the State House after that particular shooting. So he is going there. And his aim is to shore up his support among black voters. It was black Democrats who gave him the nomination in South Carolina in 2020. Is that what black voters want? I don't know. They seem very dissatisfied with Biden. And does a speech at a church make that difference? It's a start.
Right. Wendy Benjaminson, the Washington editor here at Bloomberg News. Real quick one. They say it's the economy, stupid. You're smart, you're not stupid. Is this a response to maybe the economic arguments not working that well for Biden?
I think it might be. I think they're going to continue to campaign on these three themes: shoring up their base, democracy, Trump bad, and the economy, and to be patient with them. But I think right now they're going to put Bidenomics aside for a little while, try these other arguments, see what happens.
A rebrand maybe from Bidenomics. Yes. Wendy Benjaminson, Washington, Bloomberg Washington senior editor here in Washington, D.C. Coming up, we're going to talk to Janet Lauren, our higher education finance reporter, about the substance and politics of everything happening at Harvard University, that university we keep hearing more and more about. With Bloomberg, I'm Jack Fitzpatrick. And now let's go get a check on world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington.
Thanks, Jack. Houthi militants are claiming to have attacked another merchant ship in the Red Sea. In a televised speech, the spokesman for the Houthis' armed forces says the vessel was attacked after ignoring warnings. The Houthis say they're going after any vessels that have a connection with Israel, although those purported links have been questioned. Israel is on high alert for an escalation with Hezbollah after one of the top leaders of Hamas was killed in a strike in Beirut. Hamas says Israel killed Salah al-Uri, deputy head of the group's Politburo, who is known as the mastermind behind its armed wing in the West Bank. We get more on that from Bloomberg's Bruce Einhorn.
This is now an open question whether Hezbollah sees the need to respond, or on the other hand, whether it is deterred by the reality that Israel was able to get to Beirut itself.
Bloomberg's Bruce Einhorn. A large delegation of Republican lawmakers is in Texas today to get a first-hand look at the southern border. House Speaker Mike Johnson is leading the group of about 60 in their visit to Eagle Pass. Republicans plan to make border security problems a major issue in the upcoming elections. Health officials are concerned about the rise in respiratory viruses nationwide. According to the CDC, more than half the country is seeing a spike in COVID, flu, and RSV. Dr. Nilesh Patel is the chairman of emergency medicine at St. Joseph's Medical Center in Patterson, New Jersey, where COVID cases have tripled in the past month.
They are sicker, especially patients that are the most vulnerable, that have comorbid disease, things like cancer or respiratory disease.
Patel and CDC officials say if you do come down with a respiratory infection, make sure you limit your exposure to others. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 2:40 on Wall Street. FOMC Wednesday, second trading day of the year. The Dow, the S&P, NASDAQ, all moving lower. Slump in tech stocks extended as traders sifted through the minutes of the Federal Reserve's last meeting to see if interest rate cut wagers had gotten too aggressive. The dollar is extending its climb. S&P right now down 19, drop there of 0.4%. Dow Industrials down 135, a decline of 0.4%. NASDAQ lower by 111, a drop of 0.8%. 10-year yield 3.90%. The 2-year right now 4.32%. Gold down $22 the ounce to $2,036, a drop of 1.1%. West Texas Intermediate crude up 3.3%, $72.70 a barrel, and Bitcoin down 5.1%, 42,800 now on Bitcoin. Federal Reserve is out with minutes of last month's policy meeting, and they suggest the central bank's interest rate hawks remain in command of the nest. Bloomberg's Vinny Del Giudice has more.
Fed officials agreed that it would be appropriate to maintain a restrictive stance for some time. They're also open to raising rates again if need be. At the same time, they acknowledge rates have probably peaked after almost 2 years of tightening, setting the stage for easing later this year. The minutes also show Fed officials noted there's been clear progress on containing inflation, the worst outbreak in 4 decades. Vinny Del Giudice, Bloomberg Radio.
Disney says it has won the support of Value Act Capital Management for its board nominees and will consult with the activist investor on strategy on a down day for the rest of the market. Disney up by 1.3%. Wendy's shares down 0.6% after Barclays cut the fast food restaurant operator to equal weight from overweight. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On Bloomberg Radio.
It was a political spotlight on Claudine Gay, certainly that led or began to lead to her resignation as Harvard president. That was big news yesterday, and big news in December when she struggled with other Ivy League presidents to answer questions about what constituted harassment, what constituted anti-Semitic language on campus. But there were other issues, and I'm very interested to dig into this with Janet Lauren, Bloomberg's higher education finance reporter. Obviously, allegations of plagiarism, not having a huge amount of support already from Harvard. Janet, spell it out for me, because here in Washington, it seemed like this was prompted by Elise Stefanik. But I understand it was not just Congress, it was not just the political spotlight, whether it was the plagiarism allegations or any other issues that Claudine Gay may have faced. What actually were the undercurrents? What really led to her having to step down?
Well, it was all and above, and also it had to do with money. Harvard is a $6 billion enterprise. By the way, 11% of their revenue comes from the federal government. And also, we had been hearing for a long time that a lot of donors were quite upset, not just Len Blavatnik, who a few weeks ago said he would pause donations. His family had already donated almost $300 million. But sort of your rank and file Harvard alumni who were sending in $1 checks. So you've got the finances. Also, don't forget that early applications dropped 17% from the year before. We don't know if it's a direct result of what had been going on campus, anti-Semitism. It was also the first application cycle after the Supreme Court decision. And I think they added some essays. So when you add all of that, you think of what is the job of the university president. It's to keep the enterprise running very smoothly and raise money. And in both instances, Claudine Gay had not been very successful. And we don't know what else is coming from Congress. In addition to the hearing on December 5th, which, of course, Elise Stefanik had a starring role, The committee has been asking for a lot of documents. So we don't know what's going to happen as a result of two investigations from the committee. The first one is on anti-Semitism. The second one is on how Harvard handled plagiarism accusations. But that's only two of the investigations happening. There's a third one going on through the Education Department, through the Civil Rights Act, and looking at also at anti-Semitism. So there's just a lot of stuff going on. And, you know, when Harvard is relying on the federal government for funding, a huge hundreds of millions of dollars every year for science funding. So that puts their star academics potentially at risk. But don't forget about the money coming from the Education Department. Well, Harvard is extremely generous for undergrads and paying something to the tune of more than $250 million a year in financial aid for undergraduates. More than half of undergraduates receive aid. Think about the graduate students, the Harvard Business School students and Harvard Law School who are being charged more than $100,000 annually. Each year, the Education Department funnels through about $100 million in federal student loans that are 95% to graduate students. So it's a very complicated financial picture, and there's a lot of forces. It's not so easy to be the president of Harvard.
Well, I saw a statement earlier today from Congresswoman Virginia Fox, the chair of the Education Committee in the House, saying that Claudine Gay's resignation does not negate the need for further investigation. So spin this forward for me a little bit, Janet, in terms of, does the resignation of the president of Harvard put the university in a better position with all of those issues? Does it provide some relief from that pressure?
No. It's, once these investigations are started into anti-Semitism, I'm sure you'll be hearing a lot from students and their own experience. There was an op-ed in the Wall Street Journal a few weeks ago by one of the senators from Alaska, who's a Harvard Business School alum, describing going in the library during finals and sort of being accosted by students. And I think those types of stories are really resonating with people. Why are students allowed to interrupt classes? Why is learning allowed to be interrupted? And I think there's going to be a lot that they're going to uncover. And Congress has a lot of power, and they are the stewards of a lot of money from the federal government. So you've got anti-Semitism and plagiarism. If you look at the letter that Virginia Fox initially wrote December 20th, they're talking about the accreditors. In order to get federal money, you need to be an accredited university. So it's not going away anytime soon.
Well, I'm curious also what exactly the focus, not only of investigations, but complaints possibly from donors to Harvard and to major universities, what kind of complaints and what kind of threats they're going to face. I see on X, formerly Twitter, Bill Ackman writing about going beyond an issue of anti-Semitism specifically and what he calls an oppressor-oppressed framework, more broadly a DEI issue. Tell us a little bit about the degree to which there are broader concerns among major donors to universities that seem to go beyond the recent conversation about anti-Semitism.
Well, I think there's a question of what is being also taught in the classroom. Is this oppressor narrative being taught to students? How is that changed over time? And I think you're going to see a lot of digging into a lot of those questions. There was a video that went viral of, I believe it was a class at MIT, or maybe it was an econ class at Harvard, where again lectures are being disrupted. Maybe it's just for a few minutes, but families are paying quite a lot of money to send their kids to these schools, or perhaps they're taking out loans. Why is that allowed to continue?
Right. Janet Lauren, thanks so much for joining us, our Bloomberg higher education finance reporter, with the underlying issues and maybe broader issues. Of course, you heard the congressional focus on anti-Semitism, but there's a broader issue of congressional Republicans looking at DEI at college campuses. We'll keep bringing you the latest on the underlying issues. Thank you again to all our guests this past hour. Anna Wong with the immediate response on FOMC minutes, and Enrique Morones from Gente Unida. I'm Jack Fitzpatrick. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Morgan Stanley James Gorman spoke exclusively this morning with our Shonali Basak. She told him his priority for the year, or he told her his priority for the new year, is working with the new CEO, Ted Pick.
You know, it's to support Ted, and he's a terrific guy, will be a great CEO. And my job really is to help him as best as I can, but stay out of the road. So that's really my priority.
Walt Disney has won the support of Value Act Capital Management for its board nominees and will consult with the activist investor on strategy. With more on the story, here's Bloomberg's Kimberly Adams.
You know, it's to support Ted, and he's a
Charlie, it comes as the world's largest entertainment company responds to pressure to boost performance. The two companies say Value Act has signed a confidentiality agreement that enables Disney to provide the firm with additional information. Value Act's backing may strengthen Disney's chief executive officer Bob Iger's stance against billionaire activist Nelson Peltz, who's proposed that he and ex-Disney chief financial officer Jay Rasulo join the board. Disney has been under pressure from investors to improve its performance following billions of dollars in losses at its streaming services and a string of disappointing movies from its film studio. Charlie?
And that's Kimberly Adams reporting. Disney shares, they're up 1.3%. Xerox lower after the company said it's targeting a 15% workforce reduction. Those are top company stories at this hour. This is Bloomberg.
You're listening to Bloomberg Sound on Bloomberg Radio.
Welcome back to Sound On. Jack Fitzpatrick from Bloomberg Government filling in for Joe Matthew today. We've got a little more for you coming up, but first, let's get a look at world and national news with Nancy Lyons.
Thanks, Jack. House Speaker Mike Johnson is in Texas, leading more than 60 House Republicans to the southern border in a bid to raise pressure on President Biden and Democrats to agree to strict immigration. Moronis is the executive director of Gente Unida, a human rights border coalition. He says the Republicans have the wrong idea.
I don't think that the Republicans coming to the border to speak to the Border Patrol is the answer. How come they never speak to the migrants themselves?
Enrique Moronis tells Bloomberg Sound On the focus should be on adding additional staff, including more immigration attorneys and judges. The push toward the presidential election is gaining momentum with the Iowa caucuses just weeks away. Henrietta Trey's with Veda Partners tells Bloomberg we'll likely know more about the direction of the 2024 election in the next 90 days.
You have about a third of the country who's going to decide the election, from the independents, undecided Dems who are maybe holding out for another candidate, and about 8% of Republicans. And they're all going to start making choices after the first three primaries. So this next 2-3 month interval is going to be such a momentum opportunity for either candidate.
Henrietta Trey's believes Biden has the better chance of winning over undecided voters when the final two candidates do emerge. Former President Trump is trying to get his name back on Maine's presidential primary ballot. His name was removed last week by Secretary of State Shenna Bellows due to his alleged involvement in the violent protests at the U.S. Capitol almost 3 years ago. Trump has filed an appeal, but Bellows says she is confident her ruling will stand. President Biden is ramping up his 2024 re-election campaign. The president will deliver a speech in Valley Forge, Pennsylvania on Saturday to mark 3 years since the pro-Trump mob stormed the Capitol. Biden is expected to cast Republican frontrunner Donald Trump as an existential threat to democracy. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Jack.
Thank you so much, Nancy. Bloomberg Business Week is right ahead, and we're hearing from the White House and the State Department today following the blast in Iran that has killed more than 100 people. The U.S. says it was not involved in the deadly blast and that Israel was not behind the blast either. Here's what National Security Council spokesman John Kirby said at the White House press briefing moments ago.
As the president has made clear, the United States does not seek conflict with any nation or actor in the Middle East, nor do we want to see the war between Israel and Hamas widen in the region. But neither will we shrink from the task of defending ourselves, our interests, our partners, or the free flow of international commerce. That's why earlier today, we released a joint statement alongside 11 countries condemning Houthi attacks on commercial vessels in the Red Sea, one of the world's most critical waterways, and reiterating that these attacks must cease immediately and just after we came on board. So now there's 13 nations that have signed up to that statement.
That was John Kirby, the National Security Council's spokesman, just moments ago at the White House press briefing, acknowledging very briefly any concern that the Biden administration may have on the conflicts, the news events over the past 24 hours or so, broadening in the region of the Middle East. And thank you again to our guests from earlier this hour. Great insights from Hagar Shamali, the former director for Syria and Lebanon at the National Security Council, emphasizing the difficulty that the Biden administration faces. I know we've all heard the phrase pivot to Asia for a number of years. It's especially difficult to take an eye off of the Middle East lately for the Biden administration, with the news not only out of Iran with the explosion that has killed more than 100 people, the death of the Hamas Politburo deputy chief, Saleh al-Aruri, and the troubles in the Red Sea. Thank you again to our guests, and especially to Anna Wong for very, very quick insights on those FOMC minutes from the December meeting. Filling in for Joe Matthew today, I'm Jack Fitzpatrick. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
A very good afternoon, everybody. Welcome to Bloomberg Business Week, live in our Bloomberg Interactive Brokers studio on YouTube on Bloomberg Originals. It is Wednesday, January 3rd, 2024. Carol Masser along with Tim Stenevec. And I'm thinking, Tim, out like a lamb, in like a lion.
I don't actually know what that means.
Well, you know what it means in terms of like weather or conditions being really difficult and gnarly. That's lion.
Okay.
Lamb is kind of sweet and lovely and wonderful. And it feels like we ended 2023 in terms of investing, certainly on the equity side of things, is kind of easy, kind of good. And then this year it feels a lot rougher.
Yeah, gnarly's a good way to put it. So it's the start to a gnarly year. We'll see how it goes.
I can't use lion and lamb. I got to use gnarly.
Yeah. Well, hey, I picked MTN Vail Resorts for one of my decliners today.
Because what?
The snow. It's not good,
What
Carol.
snow?
Exactly.
There's no snow.
Got to
Although
downgrade
they're
at
talking
Barclays because of there's no snow in the West.
Listen, climate change, guys, it's for real, and it's really changing things dramatically. We're going to maybe try and filter that into some of our conversations throughout the next 3 hours. Having said that, we did get the Fed minutes, and I really feel like my takeaway is that they said you could get another rate hike.
It was a little more
restrictive for longer. Like
we'll talk about this more in a few minutes, but it seemed to me it was a little more hawkish than how I was left after Jay Powell's press conference. Does that make sense?
These are the minutes. We got this when we had the meeting. Like I feel like that was in the meeting and the press conference and this.
Yeah, but the way that the market interpreted it was much more dovish.
Yeah, okay. So they're seeing it differently.
Yeah.
Like a reminder. All right, we've got lots to talk about and work that into our conversations. Hey, also ahead, escalation in the Middle East, by the way, of reported attacks in Iran, sending oil prices higher. Oil equities are, I think, your best performing major industry group in the S&P 500 today. So we're going to talk politics with Peter Cheer and Major General Mastin Robeson over at Academy Securities. A great duo, Tim, to talk markets and geopolitics.
And while we focus on the troubles in the Red Sea, what that means for trade at the Suez Canal, let's not forget about delays at another crucial trade port. We're talking about the Panama Canal. We're going to have more on this most read story. It's also today's big take.
Yeah, another most read, how the exit of Harvard's president exposes decade-spanning rifts. We're also going to hear from Morgan Stanley's James Gorman on crypto. There's something for you.